And here we go. Ooh, go live. Here we go. Live there, live there. Good evening, everyone. All right, let's make this a little bit bigger. A little bit bigger. Alrighty. Interesting. Oh, here we go. Look at this. I missed these people already. Here we go. Mark Anderson. Cool beans. Maish Tekisha. Okay. Riley, Justin Fletch, Rosa, Liz, Nico, Gray, R.D. Locks, Penn, Flashback, Amsterdam, I don't know, Go First, Spark on the Road, G.D., Luke, why? Atomic Shorts, Manny, Zahid Gill, having a very difficult time getting a hold of you, dude. Ancient of Days, cool. Robert Simmons, cool. Pastor Ken John, good evening there, Pastor. Cleo Campbell, Lisu, hello. Tito Vega, cool name. Kevin Daly, cool beans. Let's get this ball rolling. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, and consistent 1% per week, using nothing but pre-qualified dividend stocks. Now, let me tell you what I believe a pre-qualified dividend stock is. Just about any company that, Flo, that's funny. Any company that has consistently increased their dividends systematically year after year after year. We got our first one on the list today. Amestra wants to take a look at Main, M-A-I-N. Now, I didn't quite finish what I was about to say about pre-qualified dividend stock, because had I finished, he wouldn't have suggested that one. Now, I'm going to ignore that one because it does not fit. What do I mean it does not fit? When I say a pre-qualified dividend stock, meaning point blank and simple, consistently profitable for a minimum of 2 decades. That's 20 years. That means their dividends are increasing every single year, year after year after year. And weekly options. Main, M-A-I-N, does not have weekly options, so it would not fit. So it would be a no. So that being said, it is Thursday evening. Tomorrow's Friday, which means I'm not going to be here tomorrow night, so I won't see you guys again until Sunday. Sunday fun day. Woohoo! Gotta love it. Weekend's coming. Hope you guys have good plans. Me, I'm just going to do a whole heck of a lot of nothing. Nah, actually, I'm building a shed down at my mother's house. All right, things never end, I guess. First one on the list, Anthony Garcia wants to take a look at Kohl's, KSS. I love Kohl's. I actually do have some Kohl's. Let's take a look at it and go from there. Do you recommend investing in XRP? Cassidy, how you doing? Inc, how are you? Liani, when I say dividend stocks, I'm not quite sure why you would bring up XRP. XRP is not a dividend stock, and it is not 20 years old, so it would not fit. Okay, now I understand a lot of people like XRP, a lot of companies people like, but there's a huge difference. Just because you like something doesn't mean it's going to fit. All right, so first one on the list we're going to take a look at today is going to be Kohl's. So let's take a gander at KSS. Now, I always want to start the same way, same thing. I want to look at each and every time the 1-year chart, which means This is today, right here, all the way back over there is a year ago. And I'm not showing. What am I not showing? Something don't look right. Oh, that's what's not right. There we go. That's a little better. Still off a little bit. All right, there we go. Had to get the camera set up just right. This one, no matter what I do, is going to be off. All right. That being said, let's get ready to roll. All the way to the left is a year ago. Right here is today. Okay? This is today. That's a year ago. First thing I want to take a look at, I want to see 5 things each and every time I take a look at a chart. It doesn't matter how much time is in the chart. 1 year, 6 months, 3 months, 2 months, 30 days, whatever. I always look 5 things. The high, the low, where was it, where is it, and then you take your little finger and you just go, look at this, sideways, down, and then back up again. That's it. Sideways, down, and then back up. That's it. Don't make it more complicated than it needs to be, because trust me, there's a lot of ways to make this complicated. And this, hey, long time no see. Luke X, how are you today? Uh-oh, I missed some. Right about there. We're going to hold the questions right there. Wait a minute. Anthony Garcia says in Roomba Coles, they had bounced. Okay. Niso, how are you today? So let's keep on moving forward. All right, Coles. That's what it looks like. Second thing I want to take a look at is the numbers. And what do I mean by the numbers? Well, basically, to me, my idea of the numbers is basically, what can I buy it for? What can I sell it for? What are the stock options going for? So if you haven't realized yet, I do stock options. Stock options, specifically weekly stock options. When I say I want a simple, safe, predictable, consistent 1% per week, the only way I'm going to get a weekly return is if I have weekly options. K&M, how you doing? Is something that either trades on a weekly basis or sitting in front of my computer all day long. Yeah, I have no desire to sit in front of my computer, so weekly options it is. So let's take a look. It's not as difficult as you might sound. Okay? It's not that hard. It's kind of like riding a bike, driving a car, studying for an algebra test. One step at a time. One thing at a time. All right. So we already looked at the chart. Now, what are the numbers? Well, the stock is currently at 1374. Okay, 1374. If I buy it at 1374, the closest strike price is going to be the 1350 or the 14. Now, both of those are paying over 1%. So if I buy it 1374, I could sell it at 1350 or I could sell it at 14. I'd make over 1%. The 1350 is going to be the safer trade. The 14 will be the more profitable trade. Now, just because it's more profitable doesn't mean it's a good thing. Because here's the thing. Minor detail. If the stock stays exactly where it is, the 14 is not going to work. You'll get your money, okay, but you have to hold on to it. The 1350, I'll get my 1%, and the stock doesn't have to move at all. The stock can stay exactly where it is, and I still make my money, and then I'll be back into all cash again come Monday, and I get to do the whole thing all over again. Now, I know it may sound monotonous, tedious, doing the same things over and over and over and over again. But think of it this way. If I'm getting 1% every single week, and I'm spending only an hour, 10 to 15 minutes every day, okay, that's an hour a week. 5 days, 10 to 15 minutes, it's about an hour. And I make 1% for an hour of my time. Well, the amount of money I have in my trading accounts at this moment in time, that's a lot of money for 1 hour of my time. So yeah, you may not be there yet, but eventually you will. Now I'm 60, I'm retired, so this money I rely on to live on. Okay, 1% a week is 50% per year. I need that in order to be able to pay my bills, because we're the only species on this planet that's got to live, pay to live here. All right, let's go. The 1 year chart, fine. Let's zoom in and take a look at the 90-day. Wait a second. A year ago, we're at 26.13. The high of the year, 29.64. That was back at the end of March. The bottom just recently, okay, a week ago, 12.39. Imagine that went from $30 down to 12. That's a big drop. It's an $18 drop. All right, last 90 days, which is the last 3 months. Okay, 5. Ready? High, low. Where was it? Where is it? And where is it going? Okay, up, down, up. Simple. By looking at the 90-day chart, the last 3 months, high was here, just above 21. Drops down here, just below 13. And 1, 2, 3, 4, 5 days going to the upside. Well, if this is the bottom, you're not going to get any lower than the bottom right there. That's the bottom so far. Could it go lower? Yes, it could. Will it? We don't know. Time will tell. But here's the question. When do you make your most money in the stock market? Buying low and selling high. Well, you're not going to get any lower on Kohl's than the low of the year. And that was last week, the low of the year. Where is it now? Well, now it's on its way back up again. Snaggin' Whiskers. That's an interesting name, Snaggin' Whiskers. All right. The last 30 days. I want to say the last 30 days to give me an idea of where is it going next. Well, we've seen where it's been. We've seen where it was a year ago. We've seen where the high was. We've seen where the low was. She goes up, she goes down. She goes up, she goes down. Well, where are we now? Well, here's the bottom right there. Last week. So the last week's bottom there, 1, 2, 3, 4, 5 days to the upside. Look where the 30-day high is, right here, 15. Look where we are right now, right here. There's plenty of space for it to keep going to challenge the 30-day high for another 30-day high. Because you only get one 30-day high and you only get one 30-day low. Well, here they are, right there and right there. High, profit taking, boom, there it is. Now she's going back up again. That's the time, in my opinion. This is just my opinion. This is the perfect time to jump in. After a 30-day high, is profit taking, because think about it this way. If you buy a stock and she jumps up 5, 10, 15, 20%, if you don't get out and take your profits, that's your own damn fault. Because it's not a profit until you take it. Okay? And nobody ever went broke taking profits. It just doesn't make sense. If you have a profit, take it. You don't want to take it, don't. Let it ride. See how high it goes. And when she turns around and comes back down again, it's like, oh, it is what it is. It goes up, it goes down. All right, let's continue doing this. Now, I like Kohl's. I do have some Kohl's. But for the fun of it, we're going to do a quick trade right now to see, for you to see how it goes. Because it's not that difficult. You buy the stock, sell the option for someone to buy it from you for the exact same price or close to it. And then you collect the premium, and then you go on and you do the same thing again next week, and then the next week, and then the next week, and then the next week. It's actually kind of boring if you think about it, because I'm doing the exact same thing I did last year, and the year before that, and the year before that. Well, here's the thing. I took a shower last year, took a shower the year before, took a shower the year before. Something I do every day. This is just another routine, another item to add to my morning routine. Take a look at my finances, see what it looks like. Okay? Something you do consistently. You get up in the morning, you brush your teeth, you go to the bathroom, you get your clothes on, you get your breakfast, get your coffee, sit down, take care of your personal finances, take care of your daily schedule. What do I got to do today? Same thing, it's just added in there. What do my personal finances look like? If it's that important to you, you will figure out how to do it. Because I have found in my many years of doing this that most people spend more time planning a family barbecue than they do on their personal finances. Totally up to you. Your money. Figure out how you want to do it. Sweet Jones, what's happening? Okay, so let's do a covered call on Kohl's right now so you can see how it works. It's not that difficult. Now, I like Thinkorswim, which is a trading platform. You can use E-Trade, you can use Fidelity, you can use Just a Trade, you can use Robinhood, you can use Webull, you can use whatever you want. I find this to be my favorite only because 15 years ago I wrote a book, Choosing the Right Trading Platform for Your Style of Trading. Not the exact title, but more or less that's what it was. So I took a look at like 20 or 30 different trading platforms 15 years ago. I wrote the book. I chose this one, and I've been using this one ever since. All right. Let's keep on keeping on. We are live on YouTube. Yay! Steve, how are you doing? How you doing there, Mr. Steve? All right. Covered call. Let's do this. You ready? Here we go. Let's get rid of this because we don't need it. Not at this moment in time. Let's change this to covered stock because we're doing a covered call, and Thinkorswim sets everything up the way that I want it. Now, we're not going to pay attention to 24 January because that's tomorrow. Really, 1 day of time value. You're not going to get a whole heck of a lot anyway. So we're going to be looking at 31 January 25. Now, that is Friday next. Not tomorrow, next Friday. Okay? If I don't like the numbers, I will go out to 7 February. That's 2 weeks. 14 February. That's 3 weeks. 21 February. That's 4 weeks. You decide what numbers work best for you. So let's do a couple of them, see what makes sense. Because do you have to do this every week? No. You can do this every other week and go every 2 weeks out and don't do anything. But me, I got nothing else to do. I'm retired. This is my hobby. It's not a business. This is not advice. This is just my hobby. I share it with people. Great. If you like it, great. If not, hey, more power to you. Figure out how to invest your own money because at some point in time, you will retire. You will no longer be old enough to work. You have 3 opportunities. You retire. Hold on. Invest right. Do you think tariffs Trump? Okay. Nope. Okay. Invest right. Tariffs. You got to read the fine print, dude. Tariffs are basically going to be on imports. You got a problem with tariffs? You have a problem with tariffs? Fine. Buy American. And you don't have any tariffs. There are no tariffs on American-made products. Why? Because they're made right here. Tariffs are imposed on imports, stuff they bring in from other countries. You don't want to pay a tariff? Fine. Don't pay the tariff. Buy American stuff. Simple. Not that difficult. And no, tariffs are going to affect the economy. How? Don't know. Oh, that makes sense. Yeah, it does. Waiting for Kohl's to turn myself. Yeah. Tucker, Steve, I get it. All right, so here we are. Now, we're going to do a few trades on Kohl's specifically. Now, if you got a pencil and piece of paper, it might be a great time to write it out because here we go. We're going to do Kohl's and we're going to do 4 trades on Kohl's. 4, just to give you an idea. Because number 1, the setup looks perfect. The 30-day high was 4 weeks ago. 30-day bottom was last week. She is in an uptrend right now. Okay, she's just bouncing off the bottom of the year. DCNYC. I have no idea what to call you. I'll call you Chuck. How's it going there, Chuck? We're here for you. I'm here for your daughter, Chuck. Who knows what movie that came from? I'm here for your daughter, Chuck. Anyway, let's keep on doing. First, we're going to do a simple covered call. We're going to do the 1350s. Right now, the stock is at 1374. Okay? 1374. That is the current price if I want to buy it first thing tomorrow morning. Now, do keep in mind all these numbers. Every single number you see on here is going to change. Behind the scenes, skepticism will not prevail in the digital transformation. I have no idea what that means. We're talking about investing. Why are you talking about that? Anyway, $13.74. The closest strike price is going to be the $13.50. Now, if I buy it at $13.74 and I sell it at $13.50, I'm losing 24 cents right off the top. Okay, fine. I'm losing 24 cents. So I got to take the 24 cents off of whatever I'm collecting. What am I collecting? Hold on a second. The 13.50s right here. I'm collecting 45 cents. All right, now remember, I'm losing 24 right off the top. So you take 24 off of that, and I'm walking away with 21 cents. Okay, 21 cents is over 1% of 13. Remember, 1% of 13 is 13. 1% of $13 is 13 cents. So we're looking at the 13.50s. Fine, we'll want to get at least 13 or 14 cents. Well, you take the 24 off of the 45, now you're walking away with 21. That's more than 13. Okay, so that is over 1%. Let's get back to where we were, and let's do one right there, and we're going to buy that. There you go. It fills automatically. I have it set for 10. I'm going to bring it down to 1 contract so you guys understand the numbers for each contract. 1 contract, this is what I'm making. 2 contracts, you double it. 3 contracts, you triple it. Same thing. Okay? So I'm changing it to 1 contract, and then I'm changing this right here from a limit order to a market order. Now, there's 2 reasons why I do this. Number 1, I want it filled very first thing in the morning. Number 2, okay, the stock and the option are already tied together. I already know what my profit is going to be. Okay, when I say simple, safe, predictable, and consistent, well, I already know what I'm going to make before I even do it. Well, that's predictability and consistency. That works for me. Okay, I'm 60, oh wait, shit, I just turned 61. I'm 61 Sunday. I'm 61 and I'm retired. I have no desire to go back to work. Don't get me wrong, I still work, I just don't get paid, you know. I'm over at my mother's house, working on the shed, I don't get paid for that. Then I gotta do the roof, I don't get paid for that. I do the landscaping, I don't get paid for that. Then I go to my son's houses and I work on their houses. Do I get paid for that? No, I don't. That's what parents do. Supposedly. Anyway, all right, so I'm going to click confirm and send, and here's the order. Let me read it to you and explain it so you understand. Here's the order. Buy 1 covered call of Kohl's KSS 100. That means that is a weekly trade because the option is going to expire next Friday. 31 January 25. That's when it expires, next Friday. The 13.50 call option against the Kohl's stock at the market to open. That's just the order. Okay, that's what you say when you call your broker. Say, hey, this is the order I want to do. I want to buy 1 covered call of Kohl's. The weeklies, 31 January 25. That's next Friday. $13.50 strike price. The call option against Kohl's, the stock at the market to open. That's the order. Okay, take it slow. Don't be in a hurry. It's not a race. Okay, the stock market's been around for over 400 years. It's not going anywhere. Not going anywhere. All right. Next line. 1327. Break even stock prices. Basically, that means if the stock is 1327 or higher, come next Friday, I'm going to have a profit. That's all. Anything over 1627 is going to be a profit. Anything over 1650 doesn't really matter because whoever buys the option is going to buy it from me at 1650 or more. But maximum profit, $23 per contract. That's it, $23 per contract. 1 contract, $23. 2 contracts, $46. 3 contracts, $72. So on and so forth. Okay? 1 contract, that's what you get. What is it costing me for a contract? Well, cost of trade including commissions, $1,327. Now, before you panic, let's go through the numbers and do a little bit of fun arithmetic. Get my calculator. clear that right there. Now, I'm going to take the profit, $23, divided by, to find out my rate of return for the week, I divide it by 13.27. 13.27. And if you really want to get picky, 65 cents. Uh-oh, let's try that one more time. $23 divided by 13.27 and 65 cents. My rate of return for the day, for the week, 1.7. Okay? 1.7% for 1 week. Means I buy it tomorrow morning, sell somebody the right to buy it from me at $13.50. I'm collecting the premium, $23 per contract. 1 contract, 2 contracts, 3 contracts, whatever it is. 23 per contract. What if someone doesn't buy the contract? Invest right. I get that question every week. What if someone doesn't buy the contract? Well, here you go. Let's get out of this. Let's get out of that. Let's go back to here. This is to answer that question. Okay? To answer that question, basically what he said, what happens if people don't buy the contract? Well, that's neither here or there. If, remember this, if the market maker posts the price, okay, posts the price, he is required by law to fill it. Hey, I'm selling it for 45 cents a share. All right, I'll take it. That's it. It's not like you're saying, hey, I want 45 cents. Will somebody buy it? No. Here's the difference. A market order gets filled instantaneously. No ifs, ands, or buts about it. If the number is posted there, that's what you get. The limit order means I want this much and I'm not willing to take any more or any less, whichever way it is. Limit order. The market maker doesn't have to fill it. That could be a problem. That's why when I initially buy, I sell market order, because the stock and the option are tied together. I already know what I'm going to make. Now, if I already own the stock and I'm looking to get a premium, then I will use a limit order, and then I have to sit around and wait for someone to buy it. Because every once in a while, let's see, if I actually probably have some. Yep, right there. U.S. Steel. I put this order in 2 days ago, and it's still sitting there waiting on the market maker's, on the market maker's computer. He's probably thinking to himself, hey, this bozo wants 40 cents a share. Well, it's only at 37. I'm not going to fill it. That's the problem when you do a limit order. You limit your opportunities. I want 40 cents a share. Well, it's currently at $37.50. So if I change my mind, said I'll take $37.50, I have to go in and I got to change it, and then it will fill. Well, right at the moment, I want 40. Tough shit. It ain't going to fill because there's no market there. Nobody's buying it at 40. Okay, but they're buying it at $37.50. Do I want to lower my price? Sometimes I have to. So yeah, limit order, it will sit on the market maker's desk until he decides to fill it. Silver Wolf, how you doing? All right, let's keep on going. So yeah, if you do a limit order, yeah, you could be sitting waiting a long time. Market order, instantaneous. But then you only get what the market is. It's like when you go to a grocery store. You buy a gallon of milk. You pay what it says. You don't get to haggle. I've seen some people haggle. Maybe they get it, maybe they don't. To me, it's not worth it. Okay? My time is more valuable than sitting there moaning and groaning and complaining about a few pennies. Okay? My number one commodity of my life is my time. Okay? I want to be in front of my computer 10 to 15 minutes, done and over with. See, now, funny thing is, here we go. Tomorrow, remember I told you tomorrow I'm not going to be broadcasting tomorrow night because it's Friday? So I'm going to turn off my computer. I'm going to turn off my computer tomorrow at 4 o'clock after the market closes. And I'm going to try my hardest not to open up the computer until Sunday night, until we do this again Sunday night. So I'm turning off my computer tomorrow at 4 o'clock after the market closes. I'm not going to turn it back on again until Sunday night when I'm back here with you guys. I don't want to sit in front of my computer. There are other things in life for me to do. All right, let's go back because we haven't finished up that trade. because we're still doing that trade for Kohl's. All right, so we saw the 37.50. Market order. Okay. Oh, that's U.S. Steel. I didn't want to do U.S. Steel. I wanted to do Kohl's. I did good with covered calls on Pfizer. Plus, I'll get the dividend. Cool beans. All right, so I didn't want to do this one. I wanted to do Kohl's because we're still on Kohl's. There it is. Wait a second. That didn't work out right. Oh, I picked the wrong date. I picked January 24th. I picked tomorrow's date, which means my maximum profit's going to be $4. Nope, that's not what I wanted to look at. All right, let's get out of there. Come on, let's concentrate on what we're doing. Okay, so we already did 13.50. Let's do the 14. Did we look at Silver Wolf? We haven't looked at Harley Davidson yet. Okay, we'll take a gander at that one maybe. All right, let's get back to one contract. Now we're taking a look at the 14 strike. Remember I told you we're going to look at the 13.50 and then we're going to look at the 14. And then we're going to compare which one's better. So remember the first one, okay, the 13.50 gave us 1.7. So now we're looking at the 14 strike price. And let's see what the 14 gives us. Well, here we go. You ready? Buy one covered call of Kohl's 100s. That's the weeklies. 31 January 25. That's next Friday. We're going to do the $14 call this time against the Kohl stock to open, at the market to open. Okay? First thing we're looking at is the break even, 13.51. Well, the break even is 13.51. Well, the stock's at 13.74 at the moment. We're already in the money. How do you know when someone buys your call? Order will be filled. That's it. Order filled. That's it. 13.51. All right. The maximum profit for this contract is $49. Now, here's the difference. $49 is going to be the maximum profit on the option. However, if we're buying the stock at $13.74, we're selling somebody the rights to buy it from us at $14. Well, we get the difference between $13.74 and $14, which is an additional 26 cents. But the stock has to go up over 14. Ooh, I liked my little hat. The stock has to go over 14. Well, that's fine because it's in an uptrend at the moment. 30-day high was 3 weeks ago. 30-day bottom was last week. And 6 days to the upside. And do you like the company? It's at a year low a week ago. So figure out what companies you like. Tony, if your shares get called away, it will reflect your account on Saturday night. Okay. And most likely you'll get an email. Email, text, whatever. You sold such and such. Such and such got filled. All right, so 49 is the profit. Let's forget that calculator again. Now remember, the 1350, solid, setting mine and swap. Okay. Remember, the 1350 was 1.73. All right, 1.73 for the 1350. Now we're going to do the 14. Okay, $49 is what it's going to cost me. Divided by, is that the same amount of money? Just about. 1351.66. Nice. Look at that one. 3.6%. That's almost twice the amount of money. But here's the thing. The 1350 is a safer trade. Okay, this one, yeah, you're getting twice the amount, but the stock has to move up. If the stock doesn't move up, well, you get to do it all again next week. Now, eventually, the stock will get to a point, and then it'll start coming back down again, because that's all they do. They go up, they go down. So we buy them as they're turning, going up. Once they get to the top, we want to be out because it's going to roll over and go back down again. So let's go back. And take a look at the regular chart. Okay, so take a close look. I mean, just take your time and look. Up, down, up, down, up, down, up, down, up, down, up, down. You can do this all year long. The closer you zoom in. Up, down, up, down, up. That's all they do. If you like the company, great. Keep your eye on it. When it comes down, hits the bottom, 2 days the upside, then jump in, get your 1%. Well, I get 1%. You pick what you want. Some people like to buy a stock and just hold on and take that ride. And then they say, shit, when it turns and goes back down again. It's like, do you really? I mean, think about it. Honestly, don't lie to yourself. You buy a stock and it starts to going up. You're probably thinking, good, this thing's going to go on forever. Because that's what people think. Seriously, you buy it, great, I own it, this is my ticket, it's going to keep going up, I'm going to make all this money. It doesn't work that way. It goes up to a certain point, then the people just like me and a few of you out in the audience, you're going to say, oh, I'm up 10%, yeah, I'm out of here. Because there is someone just like me who can say, hey, I'm good with 1%, 2%, 3%, 4%, whatever it is. You decide what works for you. For me, 1% every week. That's 50% a year. It takes me 5 to 15 minutes every day. Monday's a little bit longer because I buy. Friday's a little bit longer because I have to do some calculations so I don't lose. Tuesday, Wednesday, Thursday, 5 minutes. I take a quick look. Okay. Take a quick look. Okay. Nothing to do. Monday and Friday are the days I spend most time. 15 minutes. For my own personal accounts. 15 minutes to get 1% a week. Now, for those of you that are new here, don't know me, I'm going to show you my personal trades that I've already done this year. Oh, I didn't show you that first. Hold on. That's all my social media. YouTube, Twitter, books by James. Yep, I've written 14. Facebook, Instagram, TikTok, podcast. Podcast I'm having an issue with. Okay? Because I did a podcast for 4 years. It was over 900 episodes. And then they went and got bought out and they changed. They want me to pay for it now. It's like, it was free for 4 years. Why am I paying for it now? So I got to iron out the kinks there. And then they're going to go to video podcasts. So it's like, oh man, now I'm going live on a video podcast. LinkedIn, Patreon, so on and so forth. So here's all my trades. Wait. Okay, check this out. Account 1. 117,000 I started out with. Okay, account 2, 100. Account 3, 100. All right. So account number 1, last year, I made 74%. Account number 2, 63%. Now account number 3 cut me a little slack because I didn't start this account until July. So for half a year, it was 33%. But 1.2% average, 1.2% average, 1.4% average. All year long. Now, every single trade is listed. Okay? You can go take a look. Just take anyone right here. Click on there. There we go. You ready? Macy's, Riot, Mara, MPW, Riot, Macy's, Mara, Riot. Okay. Next. Kohl's, Win, MPW, Walgreens, Kohl's, Albemarle, MPW, Walgreens, MPW. Each one, this is just 1 week. Okay, here's the timestamp. Tells you when I did the trade. Here's what the trade was, calendar diagonal. They're all the same, all covered calls. They just label them different for some strange reason. This is how many, this is who the stock was. This is the date. Look at this, September 6th, September 13th. This is the strike price here. This is the price, and this is my profits. Okay? And no, red is not bad and green is good. No. Green is buy, red is sell. Okay? There's no good or bad. It's just buying, selling. You slide all the way down to the beginning of the year. Ooh, here's an idea. Let's take a look at week number 3 last year, because we're in week number 3 this year. Here we go, right here. Here's week number 3. All right, last year I made 0.81. Didn't make 1% last year, week 3. Clorox, Capital One Finance, Ford, General Motors, Macy's in this account. Okay, here they are. And this is what I made right over here. Okay, week 3 in this account here. General Motors, Comcast, Wells Fargo, Morgan Stanley, and Ford. And I made 1.38% in this account. So I show you each and every single trade I did. I show you each and every profit I made and losses. Last year, I had 1 loss. Okay? You take a look at all these. Only 1 week did I lose money. However, if you average it out, I love averaging it out. Look. 1.6, 1.03, 1.05, 2.7, 2.65, 1.8, 1.9, 1.7, 4.2, 2.2, 2.4, 3.3, 8.8, 3.7, blah, 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 blah. Every single one of my trades are there. Now this year, I'm going to do the exact same thing. But you have the privilege of being here and watching it unfold in front of you because you just got here. So this year, we haven't started yet, so I'll probably end up doing it sometime next week. Because I just said 2 minutes ago I'm going to turn my computer off Friday afternoon, not turn it on again until Sunday. Let's go all the way back up. Oh, I didn't show you this. Right there. So I actually first started this. You see the date right here? Whoops. I stepped on a cord. That's funny. I first started this August 31st, 2011. I started out with $82,000. I refinanced my house, took out $82,000. I said, all right, let's do this. Simple as, James, you do know how they calculate the cost basis on covered call, different blah, 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 blah. Okay. Yeah, there's a mathematical equation. Here's my opinion on the mathematical equation, right? I buy it for $100. I sell it for $1. At the end of the week, I made $100 off of a $1,000 trade. That's 1%. Okay, crossing the I's and dotting the T's. Wait a minute. Dotting the I's, crossing the T's. I'll leave that up to someone else. If I'm consistently profitable, do I really need to know? Do you really need to know how a car works other than stick the key in, turn it, and go? If you really do, hey, fine. But if it works, and the numbers are good, okay, if you have 300 shares of Walgreens, but you only sell 2 contracts, where are they pulling the cost from? Oh, now that's an interesting question. I got a question for you. If you get 300 shares and you sell 2 contracts, my question to you is why did you only sell 2? Why not sell all 3? Because at that point, you're leaving money on the table and you're not actually benefiting the way that you should be. But that's just my opinion. Why would you only sell 2 contracts if you had 300 shares? Why wouldn't you sell 3? I don't know. So yeah, the numbers might not work in that situation. Stunt day. How you doing? All right, let's keep on going. Oh, so anyway, yeah, I started back in 2011. However, I only stepped in front of the camera last January. So as of last January, I just started sharing with you guys because they were purchased over time and all different prices. It still does. Okay, Silver Wolf. It still doesn't make any sense. Okay, if you have 300 shares, why would you only sell 2 contracts for the week? That's my question. How do they figure out cost basis? Well, I'm sure there's somebody somewhere crunching numbers. Me personally, I'm a lazy trader. Seriously, I am. I'm lazy. I have no problem admitting that. I buy a stock, I sell an option. Did I get my 1%? It's a yes or no. Because the average cost is higher than today's price. Yeah, so I get that. Seriously, I honestly get that. But the way I'm looking at it, okay, you can look at it however you want. You can do whatever mathematics you want. If I have $100,000 in my account, my goal for this week would be $1,000. If I have $50,000 in my account, my goal is 1%, $500. How they calculate it, I really honestly don't care. If I have $50,000 and I invest that and I make $500 or more, that's over 1%. If I make $450, well, that's not 1%. Okay, that's the way I look at it. It's either right or it's wrong. Do I really worry about the pennies? Me specifically? No. Should you? That's a question you have to wrestle with yourself on. If you got $50,000 and you're looking to get 1% a week, that's $500. If you make a few trades and you get 525, well, that's more than 1%. Do you really need to know the exact figures? Or are you okay with what they call slippage? I made 5.25. That's more than 1%. Great, yay! All right. My goal, okay, account number 1 is I think $1,300 a week. Account number 2, something. I get that, but you're buying and selling contracts at the same time. I'm asking about someone who already owned the shares. All right, same thing. Okay. If I bought the shares 5 or 10 years ago and my account balance in my account is $100,000, my goal would be $1,000 for the week. If I bought it at $20, if I bought 3 shares at $20, 17 shares at $75, and the remainder at $300, I honestly really don't care. If I have 100 shares, I want to sell 1 contract. Well, what's my average cost? I'm sure someone somewhere will figure it out for me. But in your account, it says, well, let's see if I can zoom into this one. Let's get out of here. There was something else there I wanted to show you, but we'll go to that later. Oh, right here. Don't. No. Oh. Okay, right here. Net liquidation value. Okay? The net liquidation value says $114,000. 1% of $114,000 is $1,100. And not first in, first out. Good morning, Bonte. How are you today? Once he buys the shares, he owns them. Just like you do in different price points, he just owns all the shares. Okay, got it. All right, so what I'm looking at on a weekly basis, what's the valuation of my account? Right down here it says $114,000. What is 1% of $114,000? $1,100. What is my goal for this week? $1,100. If I make $1,200, I'm happy. What's going to happen next week? This number is going to change because the profits I just made just changed my liquidation value. So if my liquidation value is now $120,000, well, I'm looking to get $1,200 this week. That's me. You've got to figure out what's right for you. If your valuation on your account, total assets in your account is 50 grand, you're looking to get $500. If your account is $12,000, you're looking to get 120. Whatever your account is. This is just simple math. Elementary. Remember, I created it for a 9-year-old. For those of you not knowing, let's take a look at the little princess. I do this video every night. Hold on a second. David, I'm going to get that question in a second. Videos. Holy cow. Right there while this is playing.
Hi. which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists.
All right, this is my daughter when she was 11. Now, we've already been trading for 3 years, so we decided to do videos back in 15 years ago, something like that.
List number 1 is...
And here's my favorite part.
What does that mean? That means...
This is my favorite part.
There's a different company paying out dividends. Seriously. By taking just one...
I like that. It cracks me up every time I see it. Now, I got a question over here on YouTube. Hold up. David says, I'm new in your channel. What's your opinion about covered call ETF like RDTE, XDTE, YMAX, and YMAG? David, you're new, so I'm going to go a little easy on you. Okay, when I'm looking to trade, I'm looking to get a simple, safe, predictable, consistent 1% per week using pre-qualified dividend stocks only. I don't really like ETFs. The numbers really don't work for me. Let me show you why. Okay, let's take a look at the first one, RDTE. All right, I'll put back to here, back to here, get rid of that, go back to here, and we're back at the beginning again. Now, RDTE, RDTE. Now, some of you people like these things. Me, I personally don't. Now, when I say I want a simple, safe, predictable, consistent 1% per week, per week. Did you get that, David? Per week. Meaning, I either, with this, got to sit in front of my computer every single day to get a weekly income. Because this has what is called a monthly stock options. February, March, June, September. Monthly stock options, which means I can only trade it once a month. I'm not getting a weekly cash flow from an option that only trades once a month. That's a no. Doesn't work for me. But hold on, you're new, so I'm going to give you a little bit of slack. Let's go take a look at the data stream. Now, I'm not quite sure if you know what the data stream is. RDTE. Now, we're over here at Yahoo Finance, where they have a whole bunch of data. The opening of the day, the high, the low, the close, the volume. Those are the important numbers for the stocks. What's the opening of the day? What's the high of the day? What's the low of the day? So on and so forth. So, historical data for Round Hill Small Cap ODTE Covered Call Strategy ETF, RDTE. That's a mouthful. Let's take, that can't be right. Let's look at all the dividends. I want to take a look at every single dividend they ever paid. Reason being is I have no, that can't be right. I'm going to do it a third time because I'm going to give you a little bit of a break here because you're new. Okay, look, 1 day, 5 days, 3 months, 6 months, 1 year, year to date, 1 year, 5 years, and maximum. Maximum should give me every single dividend they've ever paid. It's just not right here. This is only 1 year old. Why the hell are you giving your money to a toddler? Toddler, do you know what that is? Somebody under the age of 1, an infant. This company is only 1 year old. Why would you possibly put your hard-earned money into a company that hasn't even gotten past the first obstacle? First obstacle is 3 to 5 years. Most companies don't make it 3 to 5 years. This one's only 1 year old. Why the hell are you putting your money into this? I said it's going to be easy on you, okay? But wait, hold on. It gets worse. You may find it hard. It gets worse. Already it's a no because it has monthlies. No. Second reason, it's only been around for a year. No. Third reason, ready? Here we go. How consistently profitable are they? Now, a profit is more money than running the business. You run the business, you pay all your bills. Great. At the end, you have what's called a profit. Wonderful. Well, how consistently profitable is this company? Let's take a look. Because the dividend is a portion of the profits that they give back to the investors. Because if it wasn't for the investors, they wouldn't be in business. So, if they're consistently profitable, the dividends will continually increase. Correct? Let's take a look. The very first dividend was 36 cents. Great. The second one, 39. Wonderful. It went up. The third, 25. Wait a second. Wait. Are they supposed to go down? If you're making money and then all of a sudden you're not making as much, why would you give your money to that kind of a company? Okay, 36, 39. Oh, great. That's a profit that you're more money. But then the next one is 25. That's going backwards. Why? Why would you do that? All right, hold on. It gets worse. It does. Okay, so 36, 39, 25, backwards. 31, 34, 26, backwards. 26, not profitable again. Okay? 33, 28, backwards. 37, 27, backwards. 27, no profits. 59, 21, backwards. So, out of a whole year, 1 year, seven times out of all of these went backwards or wasn't profitable. Why the hell would you put your money there? That is a serious question. Why would you put your money in a company that's not consistently profitable? Now, you may not know this, but if you're going to invest your money, you should know it. At this moment in time, we checked last week, there's 9,834 different companies to invest in. 9,834. Why would you invest in this company? It's only a year old and they're not consistently profitable. Not even for the first year. Why? Why would you do that? Anyway, let's keep on rolling. All right. Now, this one I'm not 100% sure of because I haven't seen it, but let's take a look at what kind of rate of return are they giving you. For that, we go to the summary right over here. Okay. So the yield, they don't even know what the yield is. That's how new they are. And year-to-date total return, 3.66. All right, that's not that bad because we're into, the third week? So that's not that bad. But ask yourself the question. The company's 1 year, not even 1 year old yet. Why are you putting your money into a company that's only 1 year old? But that's the first one. Let's go see if we should take a look at a second one. Looks like MFA is basing to higher since book value 1835, which is Tuesday. Michael, I have no idea what that's a statement, not a question. But thank you for that, Michael. All right. So the next one, XDTE. Now, what makes you think XDTE is going to be any different? It's probably going to be very close to the exact same. All right, no yield, no return, historical data. Hold on, we'll take a look at the historical data. Come on, I should probably get a faster computer. Okay, dividends only, the maximum amount of dividends. Dude, this is only 1 year old also. The very first dividend was March 26th. But look at the numbers. 21, 13, 2, 20, 37, 26, 24, 34, 13, 16, 11, 20, 23, 26, 22, 24, 20, 24, 35, 41, 39, 26, 31, 34, 20, 19, 23, 20, 22, 24, 16, 21, 27, 26, 19. Oh my God. I'm just going to quit, man. That's over 10. 10 times it went down. It went up, and then it went down. It went up, and then it went down. Should I continue? I can pretty much tell you Y Max and Y Mag is going to be basically the exact same thing. Okay? Now, what I'm showing you is a simple, safe, predictable strategy that gets 1% every week. Terribly sorry if it's going to inconvenience your morning to spend 5 or 10 minutes on your personal finances. Because if your money is not that important to you, fine. Put it into one of these companies. Get the 1, 2, 3, 4% per year. It's something that you have to deal with. You either take responsibility for your own money and you get a decent return, because if you take a look at, let's take a look at this company here, XDTE. We're going to take a look at the holdings. What is this company holding on to? Okay, where is that money going? Oh, where are they putting the money into? They're not even telling us. They're not even telling us where the hell they're putting the money into. All right. I have no idea where to go. I have no idea where to go from there. But usually, they're putting VOO. Because everybody likes VOO. Another ETF, the S&P 500 ETF. Okay? Look what VOO owns. Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, Google, AVGO, Berkshire Hathaway. Those are just some of them. Okay, take a look at their historical performance. Takes a while for it to get back and forth. Okay, dividends only. Maximum amount of dividends. Alrighty. Oh, once you buy, okay, I got some questions over here. I'm new. David got that one. Silver Wolf James, need the cash flow, but if you don't need it, you can look at the monthly contract. That's right. Yes, sir. Good morning. Blah, blah, blah. I disagree with selling month contracts. I sell both weekly and monthly and do well. Not everybody needs weekly cash flow. Absolutely right. Pfizer, we'll take a look at that one. Thank you. I'm learning. Frontman, day 3 of asking to move your monitor closer because your glasses say, okay, yeah, I got that one. Thank you. No. I find that rather amusing. Okay. But thank you for that. Day 3 of asking me to move the monitor closer. Yeah, I have no desire to move the monitor closer. I'm perfectly fine where the monitor is. Okay? I'm getting old. I know I need bifocals. I ain't getting them. I refuse. All right, so let's take a look at the dividends for VOO. It's a SPY ETF. Goes all the way back to 2010. Is that it? 2010? Yeah, 2010, which means 15 years. Look at the numbers. 56, 53, backwards. 54, 57, 58, 69, 57, backwards. 64, 69, 94, 67, backwards. 74, 79, 91, 78, backwards. 81, 88, 98, 90, backwards. 95, 109, 101, backwards. 95, backwards. 88, backwards. 130, 100, backwards. 101, 118, 118, 108, backwards, 16, so on and so forth. Up, down. That's your classic 2 steps forward, 1 step back. 2 steps forward, 1 step back. If you're okay with that. Me, I want it to look something like this. This is what I want to see when I'm looking at a stock to take into consideration. You ready? Here we go. 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Each and every one higher and higher and higher and higher. Okay, I like the Dividend Kings. 54 companies that have consistently increased their dividends every single year. None of this backwards crap. Last year's dividend wasn't as much as this year's. Next year's dividend is going to be higher than this year's. Okay, Dividend Aristocrats, 67 companies consistently increasing their profits for 25 years or more. Dividend Champions, 150 companies consistently profitable. Dividend Contenders, 300 companies consistently profitable. Warren Buffett's list, I'm not 100% sure of Warren Buffett's list, but I always say, hey, if it's good enough for Warren, good enough for me. All right, so we looked at a bunch of stuff. Let's take some time to answer some questions. We have 99 questions. Holy cow. How does MFA look? What the heck is MFA? Let's get rid of this. MFA. That's a no. See, something a little bit here about Michael. Michael, when I say I'm looking for companies that are consistently profitable and have weekly options. Now, I have 5 simple rules. Rule number 1, never buy something you don't understand. If you know that this company has monthly options and it doesn't have weekly options, well, you know I don't want to look at it. So why are you suggesting it? Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure the numbers work. Numbers, what am I buying it for? What am I selling it for? Am I having a profit of 1% or more? That's it. Pretty simple. Remember, it was created for a 9-year-old. I showed you the video of my daughter when she was 11. Now, when she was 9 in 2008, she jumped on my lap and said, Daddy, can you teach me what you're doing? I said, okay. So it took me a while to come up with a trading strategy specifically for her. It had to be simple, safe, predictable, and consistent, and no way for her to lose. Because we all know, 9-year-old little girl loses money, she's going to cry, Dad's going to feel like crap, Mom's going to get involved, Dad's sleeping on the couch. It's quiet and peaceful. Nobody steals the covers on the couch. But you know what I mean. Simple, safe, predictable. It's only 2 criteria. Only 2. Consistently profitable for 20 years or more. That's it. Consistently profitable, 20 years or more, and weekly options. This MFA does not have weekly options. It is a no. That's a no. That's a no. He thinks that's funny. All right, next question. I will win. Day 5,317 of asking to move your monitor closer. Oh boy. Okay, you know what? I just move the monitor further away. When people tell me to do something, it makes me want to do it opposite. Okay? I'm perfectly happy with where my monitor is. Verizon, Sweet Jones. Sweet Jones did Verizon. Let's take a look at Verizon. I like Verizon. And hypothetically, we all know who Verizon is. Oh. I wasn't asking, isn't WFA oversold since book value? Okay, so Michael, I appreciate, Michael, I appreciate the interaction. I do. I appreciate the questions. Can I please take a look at AES? I blocked that dude. Thank you, Steve. AES. Who the heck is AES? A waste of our time. That's what AES is. Now, when I say specifically weekly options in 20 years of increased profitability. There's 9,800 different companies to choose from. There's about 300 that fit. Why are you asking me to look at something that doesn't fit? Number 1 rule, know what it is you're buying. If you know what it is you're buying and you know it doesn't have weekly options, why are you asking me to look at it? It's just going to be a no. Gaming Cheeks. Say Gaming Cheeks. I'm going to do this one more time. AES. You ready? AES. Here we go. There it is. AES. You ready? No. All right. I don't play that game. Greetings from Arizona. Okay. AES is a no. I have no idea why he wants to take a look at it. Okay. Back to Verizon. Somebody asked to look at Verizon. Let's take a look. How do you think should be a perfect portfolio? How much percentage in dividends, how much in growth stocks, and how much cash? Ooh, wow. Interesting question. Okay, Sweet Jones. You bought Verizon the 31st, $25 strike price is $39. Verizon $39.24. Okay. Here's where we are right now. What do you think? 30 days ago, we're at 40. We jumped up to $40.50. There's your high right there. Drops down. The bottom was not last Friday, but the Friday before. Last week, 1, 2, 3, 4, 5, 6 days to the upside. Yesterday pulled back a little bit, and today pulled back a bit. Is this a class? No, this is just open forum. We just talk about stuff. How to find growth story. Okay, Sugar, I'm not quite sure what you mean by that. Okay. All right, so Verizon, it is on the way up. But here's your high here. And it's already gone up from $37.50 to $39.50. It was only $2. But $2 on $30 stock. All right, Michael Anthony, you bought MFA. All right, good for you. I don't understand it and know nothing about options. Okay, I get it. You get a dividend, 35 cents each quarter, every 90 days. Okay, I don't buy that stock because the numbers just doesn't fit. Now, Michael, what I'm looking for are companies that are consistently profitable. You have a choice. You can read each and every quarterly report, or you can go straight to the dividends, because a dividend is a portion of the profits the company gives back to the investors. So if it is in their bylaws that X amount goes to the investors and they are consistently profitable, well, that amount increases every single year. If that amount doesn't increase every single year, that means they're not profitable that year. Can you take a look at WBS? What the heck is WBS? It's never a good thing when I have to say, what the heck is that? WBS. No. There you go. No. When I say never buy something if you don't understand it. Well, apparently you didn't understand WBS. Because if you did, okay, Nick, if you understood WBS, it has monthly options, which means I can trade it once a month. How am I supposed to get weekly cash flow from a company that has monthly options? The only way to do that is to sit in front of the computer all day long. Yeah, that doesn't work for me. I want to sit in front of my computer for 10 to 15 minutes. That's it. I have other things I want to do. I want to go to the beach. I want to go for a walk. I want to play with the dog. I want to go in my garden. I want to rake the yard, mow the lawn, trim the hedges. I have other things I would prefer to do than make money. Got it. Okay? Weekly options in 20 years, 2 decades of consistent cash flow. It's a ball stack sucking place next to my house. Hey, dude, if that's your hobby, more power to you. Why you move there is beyond me. Anyway. So getting back to Verizon. on the overall 1 year chart, it looks like a good time to jump in. Okay, up, down, sideways, up, down. Here we are, moving back up. Yeah, it's got a lot of space to go because here's your average right here. And now she's down below it, and she's turning around, coming back up. Well, great. Yeah, that's funny, Nick. All right, so let's go back to where we were. So, yeah, Verizon is coming off of a big high right here. See this? The high was a couple of weeks ago. Now she's down here, bouncing off, coming back up. So it looks like a good opportunity. Do you like it? Are you willing to hold on to it? Those are questions you need to ask yourself. I don't understand why food companies like Hormel, CAG, and the others keep making new lows when dividends and people must eat. Okay, I get it, Michael. Okay, stock prices go up, stock prices go down. Why? It's like, why does the sun rise in the east and set in the west? Because it just does. Trying to figure things out drive you crazy. When you can, don't forget my question, please. David, I am old. I'm getting older every day. Hit me with that question one more time. Okay, while you're doing that, I'm going to take a look at the questions over on TikTok because there's 99 of them. Risk mail. I'm using my 401k money via Fidelity brokerage inside. Where should I get dividend data? Ooh. Now, see, I'm not too fond of Fidelity, but if you like it, great. Hi, long time no see. Luke X, how are you? My suggestion, okay, when you're looking for a good dividend stock, there's a lot of websites out there that'll give you information. I like to use Yahoo Finance, okay? I simply go to Yahoo Finance, okay? I go to historical data. DOM, CSAN. What the heck is CSAM? Never, ever, ever, ever a good thing. CSAM. Can't find that symbol. No. So let's go back to that question. Oh. I like to use, David, what should be perfect portfolio? Okay, yeah. All right, David, I see that question. Now, hold on a second, David. CSAN. Oh, okay, hold on. CSAN. Okay, David, I'm going to get to your question in a second. CSAN. I still never heard of it. CSAN. No options. Holy fuck. All right. I'm going to go back to it again. All right, you ready? I like using Yahoo Finance. Any information, fundamental, whatnot, you can find it. You got the summary, you got news, research, charts, community, statistics, historical data, profile, financials, analysis, options, holders, sustainability. A lot of information you can find in Yahoo Finance. Now, Google Finance basically has all the exact same stuff. You can probably get the same information from the CBOE, from NSYE, from NASDAQ. Almost any financial website will give you all the information that you need in order for you to make a good decision. Now, here's my criteria. Are you ready? It is so simple, it's mind-boggling. And I only have 2 criteria. That's it. I've been trading for 20 years. 2 decades, 20 years. My criteria is simple. Consistently profitable for 20 years or more. Weekly options. That's it. You can look at book value. You can look at RSI. You can look at the Fibonacci crap. You can look at the MACD. You can look at RSI. You can look at anything you want. There's a ton of information out there. It's all going to boil down to what is it that makes sense to you. To me, consistently profitable. That just makes sense. And I don't know why people can't understand that. If they're consistently profitable, that's who I want to buy. Do they have weekly options? Great, even better. That's it for me. 2 criteria. Consistently profitable, weekly options. I want weekly cash flow. That's what I want. So, David, to answer your question, what should be a perfect portfolio? How much percentage in dividends, how much in growth stock, and how much in cash? Well, I can answer a couple of that for you. Cash, 0. Why would you have cash? It's a depreciating asset. Every year, your cash is worth less and less and less. Why do it? Okay, what companies should you buy? Well, that's going to be totally up to you. What makes sense to you? To me, consistently profitable. That's it. Okay, if you're going to go into business with someone, okay, I don't care what college you went to. I don't care how much letters you have after your name. Do you know how to get Warren Buffett's book? Yeah, you just go and search out Warren Buffett's book in the cell chart, and he said, buy, and that's it. It's really not that difficult. Go to Google, Warren Buffett's book. Or I want to buy Warren Buffett's book. Right in Google, and they'll show you exactly where to buy it. All right, so what was I getting at? Choose a company. Now, you know what? We haven't done it in a week, so let's do it right now. For the fun of it. Why the hell not? FinViz, Financial Visualizations. It's a company that gives you screen stocks, every single stock you can imagine. I'm going to go to the screener right there. I only want to see one thing. That's this right here. Oh, it changed again. 9,854 companies. Let's get rid of this. Right here. See this right here? 9,854 companies. That's it. That's a lot of companies. Now, all this stuff up here you can use to figure out which ones you like, which ones you dislike. But that's really the only numbers I'm looking for here. How many companies are available at this moment? 9,854. Okay? Consistently profitable, weekly options. That's all I want. If I go over here for options, okay? Optionable. 5,588 companies that have options. That's a lot. Okay. Well, how many have dividends? Dividends. Okay. 3,400. So 3,400 companies have options and have dividends. That's still a lot. But I can't find out how profitable they are. Okay, here does not tell me, are they consistently profitable year after year after year after year? It doesn't tell me that. So I don't really need that anymore. I don't need that anymore. Let's go back to here. All right. That being said, let's move on. We still have 99 questions to go through. So, Russ Meal. Real smile. Okay. You have to find a financial website that you like. I like Yahoo Finance. I've been using it since I started out 27 years ago. I like it, and I keep going on and on and on with it because once you get used to something, it's simple. Just keep on doing it. If it ain't broke, don't fix it. That's my favorite. Luke, long time no see. Uh-oh. I got 99 questions to go through, so I'm going to see if I can get through. Holy cow, it's 10:30. Alrighty. Hi, Google. Sorry. Noah Carter Ross wants to take a look at Google. Now, Noah, when I say 20 years of consistent profitability, Google's been around for 20 years, but Google has only started paying dividends for the last 2 years. So 18 years before I look at Google. Sorry. Mateo Jose, ¿qué pasa, amigo? ¿Cómo está? ABBV, that's a good company. Let's take a look. Here we go. You ready? Here's our high. Here's our low. Here's where it was. Here's where it is. Look at the movement. Just take your little finger, right onto the screen. So I can do my screen. See that? Okay? Up, down, up, down, up, down. And it don't look that good. So I'm going to zoom in for the last couple of weeks. Oh, now this is interesting. Okay? David, I'm glad you like that. David finds something that works for you. For me, 98% of all of my money is invested at all times. People always ask me why. Well, I believe in the American economy. Love my neighbor. Love the guy across the street. I love the lady 3 streets down. My aunts, my uncles, my brothers, my sisters, they all work in America. They all work in American companies. The American economy runs on us investing our money in the American economy. Spending our money, keeping it flowing. It's called currency. You're supposed to spend it. You spend it, it comes back to you. You invest it, it comes back to you. If you let it sit, it's slowly going to depreciate through the thanks of the Federal Reserve, who keep increasing inflation, which means every year your value goes lower and lower and lower. So why would I keep cash? If I'm going to keep anything, I'll take the cash and I'll put it into gold or silver, some kind of precious metal that keeps its value. I keep all my money invested in other American companies because I believe in the American economy. All right, that's me. You got to figure out what balance is right for you. Okay, because I'm totally different than anyone else. I'm what you would call, I have been described as a unicorn in a sea of donkeys. Or an acquired taste. I don't do things normally. I don't like it when people tell me what I have to do. It makes me want to do the opposite. I'm what you call a Gen Xer. I prefer, just like my brethren, we prefer to be left alone. Seriously, I do. I don't bother anyone. I don't get anyone's space. I keep to myself. I do my own little thing. And I prefer it that way. I prefer to be left alone to my own devices. All right, so AbbVie, let's take a quick look at it. It's $170 at the moment. 30 days ago, we're here. She shoots up, pulls back. Right there is what I want to show you. Yesterday is the new 30-day bottom. Today, it is higher. I like 2 days to the upside. So if this is accurate, okay, she comes down. Here's your bottom here. Today's higher, a higher bottom, and a higher close. Is it bouncing off, going to the upside? Maybe. But I like 2 days for confirmation. Some people like 3. Some people like 4. Some people like a week or two. Look at here. 1, 2, 3. Well, didn't do anything. 1. I'm looking for one more day. So if tomorrow is an up day, this will be perfect for jumping in on Monday. For me, you got to figure out what's right for you. But let's take a look at the numbers. Currently, 171.91. The 172s are going for 292. That's well over 1%. So that's a yes. Awesome. It's a great pick. But let's see, what does it normally do this time of year? Now we're going to take a look at what is called seasonality. Now, seasonality gives us an idea as how does the stock move every year? Well, because the company's been around for quite a while, right? So how did it do last year? How did it do the year before? How did it do the year before? So on and so forth. I look at 10 years. This is called a seasonality chart. All the way over to the left is January 1st. All the way over here to the right is December 31st. Okay, this blue line represents the movement this year. Not much, just coming down. Well, look at month of January. See these lines here? January, February, March, April, May, June, July, so on and so forth. So I want to take a look at just the month of January. So I take my cursor here, click left, drag right. Okay, now that's January 1st, and this is February 10th. So this is January to February 10th. Look at where she's going, down. Look at over the last 10 years, down, right until the beginning of February. Then she turns around, goes back up. So is it accurate? No. It's basically showing us what did it do over the last 10 years. Does that mean it's going to do it again? No, it doesn't mean that at all. All it means is systematically this thing usually goes down in January. Well, what is it doing now? It's going down. Just because it did it last year and the year before for 10 years in a row, is it guaranteed? No. But if it did it 10 years in a row, more than likely it's going to do it again. That's all that means. It did it last year and the year before and the year before and the year before. Maybe it will. So for AbbVie, I would wait a little bit while longer or jump in. But here's the thing. This is something you need to keep in mind. Just because it did it last year and the year before, okay, the current movement supersedes historical performance. Because as you're driving down the road, you see what's in front of you. You got the rear view mirror, you see what's behind you. Seasonality is what's behind you. It's what it has done over the last 10 years. Now, granted, that's what it has done over the last 10 years. Doesn't mean that's what it's going to do it again. Right here, this is now. This is happening now. Okay, 3 weeks ago. Okay, yesterday, today, to the upside. Is it going to go up? Do you like AbbVie? That's the number one question. Well, number one question should be, does it make sense? Number two question should be, do I like AbbVie? Question three should be, do I like AbbVie at this price? Question four should be, do I like AbbVie enough to buy it and hold on to it until it hits my target while I continue to collect dividends and weekly premiums? Those are the questions you need to ask. Never buy something unless you really want to buy it, hold on to it for a long period of time. Simone is in the house. How you doing, Simone? Okay, somebody wants to take Ish Mi Amor, Pfizer, PFE. Pfizer, PFE. Okay, take a quick gander at Pfizer. Pfizer, here we go. 5 things I want to look at every time I look at any chart. High, low, where was it, where is it, what's the direction? Down, up, down, up. Okay, interesting. Eric, thank you for that. My birthday was Sunday, 2 or 3 days ago. 2620. The 26s are going for 32, but I'm losing 20 cents, which means I'm only collecting up 12 to 16. That don't work. But the 2650s going for 15 to 18. Nope. Sorry, kiddo, the numbers just don't work. I'm not getting my 1%. Now, don't get me wrong. I like Pfizer. I do. It is on my list. Just not this week. That's all it means. It's not that I don't like it. I do. But the numbers, okay? Do I like the company? Yes, I like the company. Do I want to invest in it? Yes, I want to invest in it. But I only want to invest in it when everything's going in my favor. At this moment, it's not. Okay? It's a little bit of a down. Let's zoom in a little bit closer. Okay? 30-day bottom, 30-day top. Now she's coming down. It's going to continue to come down until it's done. Isn't that weird? It's going to go down until it's done. And then it'll turn around and go back up. Well, how high is it going to go? It's going to keep on going until it's done. And then it'll go back down again. It's weird. Look, it goes up, it goes down. It goes up, it goes down. Let's pull it back just for the fun of it. I like doing it. I do. I think it's funny because people just don't seem to understand. They think just because I'm buying it, it should continue to go up. Doesn't work that way. Now look, if you bought it down here, 26 bucks, and she shoots way up to here, yay, it's going up until it stops and goes back down again. That's all stocks do. Don't get too attached. This is what I try to tell people, don't get emotionally attached because it's going to disappoint you. It's going to go up, and then it's going to go down. Then it's going to go up, and then it's going to go down. Then I've never, ever, ever seen a stock go straight up and never come back down again. Never seen it. Never. Now, I've seen stocks shoot up nicely, but at some point, people start saying, holy cow, I'm going to take my profits and say thank you. And then the stock comes down. I've never seen, now I've been doing this for 20 years. Is it possible? Yeah, it's possible. I haven't seen it yet, but it's possible. All right, so let's keep on going. Aiden, JEPQ, we did this the other day, Aiden. No. When does the contract end? Okay, each and every contract has a different beginning and a different ending. Whenever you buy a stock and sell a contract or sell a option, David, thank you for everything. I have to leave. I hope to see you next time. I'm here every night except for Friday and Saturday. I think your contact is better and true than other people here on YouTube. Well, I thank you for that, David. But here's the thing, David. I appreciate it. Thank you very much. But don't listen to a word I say. Do your own research. It's your money. Nobody has more interest in money, in your money than you do. Maybe your wife and her lawyer, but you know what I mean. Thank you, David. Have a good night. All right, so let's keep on going. 72. Who said that? That's not nice. Pfizer. We already looked at Pfizer. I forget where I was. Oh, contract. Here we go, right here. Depending on which one you buy or which one you sell. Dates are right there. I live in India. Thank you. Namaste. 24 January. That one ends tomorrow. 31 January. That one ends next Friday. 7 February. That one ends in 3 weeks. 14 February. That one ends in 4 weeks. Each and every contract is different by the dates. That's about it. Other than that, everything else is the same. They go up, they go down, just like the stocks do. Boxer Dad, what are the bid and ask? Ooh, bid, mid, oh, where's mid? Where do you see mid? I don't see mid. I only see bid and ask. Okay, bid is what you can sell it for. Ask is what you have to buy it for. It's like when you go into a grocery store, think of it this way. Okay, you get your Circle K, 7-Eleven, Quick Stop, Quickie Mart, whatever corner store you have around the corner. Okay, you go in and you buy a gallon of milk. You pay $3.50 for it. That's what you pay for it. Now the person who owns it, owns the store, they will pay $3 for it. They will sell it for $3.50. You and I are consumers. We buy at the ask price. That's the asking price. The bid is what the owner is buying it for. Okay, so if I want to sell, I'm getting the bid. If I want to buy, I'm paying the ask. And the difference between the two is called the spread. I have no idea what the mid is because I don't see the mid there anywhere. Let's keep on going. 72. Bill of sale. Bakery low short. I have no idea what it means. Bonds or stocks? We're looking at stocks. Cuban cigars? No. Good point. Thank you. Is 300 in a 401k at 41 good? Well, Vetty, it depends. No, how are you looking at it? And where are you living? If you're living in one of the Pacific Indo Islands, well, that's a nice number because there's nothing to do there and it's a lot of money. At 31, you should be 800,000 minimum in a 401k. Dino. Okay. Hershey and Mars. Hershey's and Mars derivations. I have no idea what that means. Okay. Lost my ass on options. Stay away, Dino. Yo. Say, no, Dino, when you say you lost your ass on options, my assumption would be that you were buying options and not selling. Because buying options, you have a 20% chance of being right. 80% of all options expire worthless. So why are you buying if 80% are all expiring worthless? Now, I'm a seller. So 80% of the times I'm going to be right. 20% of the times I'm going to be wrong. Brian, Brainy Bit. Hey, James, I appreciate all of the free insight and advice you give. Much appreciated. Thank you. Neil, Where do you see order filled when the covered call is bought? La 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 la. Trade monitor right there. Okay? You ready? Working orders. That means it's an order that hasn't been filled yet. Filled orders. Okay? These ones were filled today, and this one was not filled today. Okay? That's all that means. Okay? Working means it still hasn't been filled yet, and this, it has been filled. That's all. Right there. It tells you right there. Working orders, filled orders. Okay, so let's keep on keeping on. All right. No. Chevrolet. Holy cow, I haven't heard from you in a while. Glad that you're still good. Jeff, why do you have multiple brokerage accounts? Jeff, that's a good question. Why do I have multiple brokerage accounts? Because I don't trust the government. Because they could come in at any day and shut down any one of them. So I got 7 of them. I got a good one for you. CP wants to take a look at Shell. Hold on. Where the hell is Shell? I don't even know what the ticker symbol is, Shell. Is that Shell? Okay. 66. Okay, we'll take a look at that Shell. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, sideways, down, up. Now it's back down again. All right, so let's take a closer look at this thing. Currently at 67. The 67 is going for 90. Nice, I like that. So let's take a look. What's this going on right here? What's this? Yeah, we're going to say no. Sorry, dude. Take a look at this. Take a look at Shell. 30 days ago is our 30-day bottom. Okay? She shoots on up. Now she's coming back down again. You missed it. That's all. Okay? Jumps up. Now she's coming back down again. Sorry. No to Shell. I do good on covered call on Pfizer, and I will receive a dividend. Eddie, nicely going. Why sell a call on Monday when you could sell it in the Friday before? Songs to follow. Okay, so songs to follow. Are you ready? If I buy a stock on a Monday, sell a covered call, I collect my money on a Monday. The option expires at 3:59 p.m. on Friday. So if I want to sell another option on Friday, I have to buy back the one that is still active, which means I have to pay, I have to dish money out in order to release the stock from that option so I can sell another one. Okay? So you cannot sell an option on a stock in which you already sold an option on that is still active. You actually have to close it out, buy it back, let it expire before you can do another covered call. That's why Monday through Friday. Monday through Friday. Now, if I did it on Friday, I'd buy the stocks on Friday, sell the options on Friday. Then when the next Friday comes, I have to buy those options back, which means I have to dish out money. I don't want to dish out money. I prefer to have money coming in, not dishing money out. Okay? So, next. How will tariffs affect Alibaba stock? Don't know. Now, Alibaba stock doesn't fit this category. Okay? Tariffs are going to affect everything that is imported, made somewhere else. You want to avoid that problem? Stop buying shit from overseas. Buy American. You're an American. You're here. Buy American stuff. You don't want to buy American stuff? Then you deal with the tariffs. It's that simple. Okay? There's a reason why you can't buy a Ford car in Germany. Because the tariffs that they charge us are crazy. So we don't sell our cars over there. They sell their cars over here because we don't charge them tariffs. It doesn't seem fair. Okay? They charge us a huge tariff. We charge them nothing. Why do you think that's fair? If they're charging us 50% tariff, we should charge them 50% tariffs. The right hand always washes the left. Sherman, what do you think about nowadays market up or down? Oh, okay. Sherman, I've been doing this long enough. Really, it really doesn't matter to me who sits in the big chair. If the little guy's going to get screwed, the little guy's going to get screwed. Okay? We're little guys. I admit it. I'm a little guy. I found something that works for me, and I'm hoping that it continues to work. Okay? It worked over the past 15 years. Is it going to work this year? Well, we will see. Okay? If I only buy American companies, if I continue to do covered calls against them, if I continue to collect 1% every single week, I'll continue doing it. It's actually that simple. If it ain't broke, don't fix it. Next question. What do you think about Tesla? Nope. Google? Nope. Spider? Nope. Meta? Nope. Henry, dude, you gave me 4 no's. Cool. Now, Henry, when I say I only invest in companies that pay dividends, which means they share their profits. Now, here's one of the reasons, and I haven't said this today, and I apologize for not saying this today. This here is what is called an EX dividend calendar. It's a calendar, January 2025, 1st, 2nd, 3rd, so on and so forth. We are 23rd right there. This is where we are. All right? Now, see these little green dots? Each one of these green dots represents a dividend stock. Okay? Ben Franklin, McKesson, Illinois Toolworks, Nucor, O Realty, General Dynamics, Abbott Labs, AbbVie, so on and so forth. Each one of those companies is on one of my specific lists because I like them for some strange reason. Now, the reason why I only do dividend stocks, are you ready for this? Stocks move for 2 reasons. That's it, only 2 reasons. One is what is called an unknown reason. I mean, the stock drops. Why? I don't know. An unknown reason. Lawsuit come out of nowhere. Natural disaster. Hurricane, flood, storm, tornado, earthquake. That's an unknown reason. You don't know that's going to happen. Or what if a very important person in the company dies? You don't know. You cannot plan for that. That is what's called an unknown reason. Okay, in the Gulf of America, when British Petroleum, when BP had a leak of oil in the Gulf, the stock dropped. Nobody knew that was going to happen. It's an unknown reason, something that just happened. When you find a strategy means dividend stock ideas. Okay, Sherman, thank you. Now, the first is an unknown reason. The second reason is a known reason. Well, we know why the stock is moving up. The earnings reports are coming out. The dividend is going to be paid. The seasonality is here. What does that mean? Well, Christmas is coming. This stock always goes up right before Christmas. Hershey's always goes up before Valentine's Day and Easter. Okay? Weight Watchers, that goes up at the beginning of every year. Certain stocks move predictably, consistently every single year. Well, the dividend. Each one of these little dots represents one of the companies paying a dividend. If the dividend is a known event, something we can plan for, if the stock consistently, General Dynamics, if the stock consistently goes up before they pay the dividend? Well, it's right there. I see it right there. So me personally, I figured this out years ago. The stock goes up before the dividend. Great. Well, I'm going to buy it 2 weeks before. 2 weeks on a Monday. I buy it on the 30th. It moves up. I make my 1%. Great. That works for me. Next week, I'll do Procter & Gamble because I already did General Dynamics. I already got the 1% from them. Well, next week, I'll do Procter & Gamble, Lowe's, Caterpillar, Clorox. Okay, every single week, there's literally... I'll show you. Hold on a second. Okay? These are all the dividend stocks that pay dividends. Now, it looks like there's nothing there, right? 141 companies, 34 companies, 33 companies. There's nothing here. Oh, that's MLK Junior Day. That's probably why. Okay, but 141 companies are paying a dividend on December 31st. Stocks have a tendency to go up in value, go up in price just before the EX date. And I just so happen to have an EX dividend calendar to tell me what stocks that I like. See, I don't do all these. Hold on a second. You are a mastermind, I think, in dividend stocks. Thanks, Sherman. That's not my list. My list is here. Okay, my personal list right there. Okay, these are some of my personal lists. Specifically stocks that I like that consistently increase their dividends every single year. I buy them before the EX date, 2 weeks before, on a Monday. Market open. I look at my 1%. If I get my 1%, I'm out at the end of the week. If not, I'll do it again. Week 2, grab another 1%. If I get out, great. I got 2%. But if not, I'll do it again. And I'll grab another 1%. Now I get 3% before the dividend. Premium, 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 dividend. That works for me. Most people just collect dividends once every 90 days. But I'm collecting the dividend and the premium. And the funny thing is, the premiums are usually higher than the dividends. Well, that just makes sense, right? All right. Let's keep on keeping on. Tuck. Do you have a certain day to sell calls like Monday or Friday the week before? Okay, Tuck, just said it. Okay, I don't know if you were paying attention. If I like Procter & Gamble, okay, PG, it's right here. Hold on a second. Procter & Gamble right here. If I like this company, I will buy it 2 weeks before, okay, 1 week, 2 weeks before, on a Monday. Buy at the market open, sell it at the market price. I'll collect my 1%. And if on Friday I make my 1%, guess what? I'm back into cash on Monday. If not, I will do it again. If I'm out, great, I'm back into cash on Monday. If not, I'll do it again. And I'll keep doing it every single week. Get a 1% every single week. That's 52% per year. Simple interest. Compounded, it's like 70. But I didn't want to, say 70. It scares people away. 50% does. But just, that's just it. Does it work? If it ain't broke, don't fix it. Tyler, you're welcome. Tyler, what's the data stream? Oh my goodness. What is the data stream? The data stream is data. That's basically it. Okay? Historical prices. Here we go. Come on. Why isn't it moving? Oh, capital gains. Here we go. What the hell? Oh, it's not working. All right. Okay, here's the data stream. Okay. Okay, this is the data stream. January 23rd, the open, the high, the low, the close, adjusted, and the volume. Those are all the numbers you want to see. Okay, January 16th, the open, the high, the low, the close, the adjusted, the volume. The data stream, it houses the data for the company. Well, do I want to change the data? Fine, let's change it. What do we want to look at? Dividends only. Okay, so give it a second. There you go. Here are the dividends. 28, 28, 28, 28. Okay? Data stream just houses all the information. The open, the high, the low, the close, the volume, the dividend, kind of stuff like that. Next question. Ooh, got some questions down here. Explain the numbers. Tyler, what do you mean explain the numbers? You buy the stock at a certain price. You sell it at a certain price. It's either going to be 1% of your price or it's not. Holy cow, 418 people here. Ooh, I must be saying something right. All right, so let's go back to... And let's find another stock to take a look at. You guys, all these people here, somebody wants to take a look at something. So let's keep on going. If you only had 500 to start, what would be your strategy? Dividend capturing. Dividend capturing. It's a simple strategy. It's been around for over 400 years. Target. Mr. Omason wants to take a look at TGT. Well, let's take a look at Target. TGT, in case you didn't know, Target's been around for over 100 years. They are a dividend king. They have increased every single year for 50 years, 5 decades, 50 years. So let's take a gander. Okay, here's the high, here's the low, here's where it was, here's where it is. Now, Target. I've learned my lesson with Target last year. Okay, what was my lesson? Take a look at this. You're going to get a kick out of this. This is what you call a black swan. You ready? Look at that big move. Big, huge move. Wait, you know what I'm going to do? I'm going to change it up a little bit. Hold on a second. This way, make it a little easier for you. Okay? Here we go. Here's the whole 1 year chart for Target. Here's the high. See? High. Here's the low right there. Now, do you notice anything different? Something strange? Look at this big gap right there. There's another big gap right there. There's another big gap right there. And there's one more gap right there. Look at the size of the gaps. It goes from 155 down to 120. That's a big drop. This one, it goes from 142 to 168. That's a big jump. This one right here, it goes from 158 down to 140. Another big drop. Right here, big jump. It goes from 50 up to 150 to 170. But you notice what they all have in common? Earnings report, earnings report, earnings report, earnings report. I've learned over the years certain stocks you stay away from during the earnings reports because they have what is called a black swan. Now, a black swan, we all know you don't see them that often. Well, you got 266 trading days. 266. Only 4 of them were black swans. 1, 2, 3, 4. Each one happened to be on the earnings dates. Target. So, now, last year, 2 years ago, I bought Target at 135. 135. And then she drops down to 102. Yeah, I was a little uncomfortable. Did I sell? No. Remember my rules? Never buy something you don't understand. Well, I understand Target. Number 2, never sell at a loss. As 135 drops down to 102, I didn't sell. However, I held on to it for 6 months. It turns around and then it goes into one of these things. And it jumped $16 overnight and I lost $15,000 overnight. Because of a black swan. Just jumped up. Sometimes you win, sometimes you lose. All right, so Target. Let's take a look at Target. Hold on. We already looked at Shell, Michael. Michael Anthony wants to take a look at Shell. Let's get out of there. Let's get out of there. All right, so here we go. Target a year ago was at 140. The high of the year, 182. The high of the year, 182. That was in the beginning of April. The bottom of the year was in November, the end of November of last year, 120. But from there, look at the movement now. This is where we are now. Take a look at this. Nice movement. Okay. Let's look at the last 30 days. Is it the right time to jump in to target? Well, 30 days ago, here we are. High, low, where was it? Where is it? Look at this. Up, down, up. Well, she went up, but she's stalling right here. Is it going to continue to go up, or is it going to pull back? This is a big jump here, and it doesn't have much further to go there. So what's it going to do? What's it going to be, boy? Yes or no? Let me sleep on it. Okay, 137. That's the current price right now. So at 137 doesn't make sense for me. Am I going to buy it at 137? If I do, I'm going to sell the 138s. And the 138s are going for 154, which is more than 1%. So remember, I'm looking to get a simple, safe, predictable, consistent 1% per week. This company, Dividend King, which means they've increased their profits for more than 5 decades. That means this year they're paying out whatever dividend. Next year it's going to be higher. The year after that it will be higher and then higher and then higher. Most companies, once they get on the Dividend Kings list, they do not want to come off because it's a very prestigious list. It's very attractive to people such as myself that are retired. And trust me, at some point in life, you all are going to be facing retirement. Whether you choose it or whether they say, hey, you're too old, stay home, because eventually you will get there. Eventually you'll be here at 61, 62 thinking to yourself, I could be fishing. I could be knitting. I could be hanging out with my grandchildren. I can be doing anything. Why am I still working? So figure it out. All right, anyway, that's Target. Does it make sense? Yeah, it kind of does. Now, what does Target normally do this time of year? That's very important. So normally, Target, it doesn't look very thrilling. Look at it. From here to here for the next month. Okay, it's not that bad, but it's not really that glamorous. See, we're here. She's going to dip a little bit towards the end of the month. And at the beginning of February, she'll slowly ride it up until the second week of February, then slowly pull back again. Do you like Target? That's all that matters. Do you like it? Are you willing to hold on to it for a long period of time? These are questions you need to ask. Do I like this company? Do I want to hold on to this company? Because you can collect a dividend once every 90 days. And then you can collect a premium, which is, what's the premium on this thing anyway? Let's go back this way and change this. Uh-oh. Too far. There we go. Change this back. Right there. Okay, so what is the premium on this thing? So currently it's at 137. The 138s are going for 154. All right. Let's do one. Let's do a practice trade on Target for the fun of it. We're going to do the 138s because it's at 137.73. Well, the closest strike price is going to be 138. Come on, this is elementary school stuff. 137.73. Okay, the closest strike price is going to be the 138. So let's do the 138. We should be able to collect 154 per share. So let's take a look. What does it look like? First thing I want to do is change this. Covered stock. The 138 right here. Okay, buy that. Just one contract, because trust me, you'd panic when you see what 1,000 shares. 1,000 shares of that company would be. The market price. The reason why I want market price is because the stock and the option are tied together when I jump into it with this type of a trade. Buying the stock, selling the option, collecting the premium. How much am I going to collect? Well, let's see. Here's Johnny. Here we go. Buy one covered call target, TGT. Weeklies. 31 January 25. That is next Friday. Now remember, when you buy the stock, you own that forever until you decide to sell it. The option, the covered call, I'm selling against it. Well, that's only good for 7 days. That's it. After the 31st, it becomes worthless. And then I do it again until I hit my target. All right, well, let's keep going. The 138 call against the target, the market order to open. That's the order. Okay, now, break even is 135.63. Well, the stock is currently at 137, and it's going up. So that sounds good. The maximum I'm going to make on this trade is going to be $236. Okay. All right. So, get my calculator. Clear that. 236.50 is my profit. Okay, right here, see it? 236.50, my profit. Right there, 236.50, that's my profit. Everything's right there. Everything you need to know is right there. Hey, James is all. I'm a little late to the party. Angel, what's happening? Okay. All right, 236.50. That's how much the profit is for one contract. Okay. How much does one contract cost? Well, let's figure that one out. Divide that by 13,564 and 16 cents. Okay. 1.7. 1.7%. Now you're going to ask yourself, hold on a second. That's just for 1 week. 1.7%. Okay, great. That's for Target, if you like Target. So here's the question. You may not be thinking it, but you should be. If I am getting 1.7%, but it's costing me $16,000 at 1.7%, didn't we do Kohl's earlier? And wasn't that like $13 per share? $13 per share, and I was getting 1.7%. Well, this one is $137 per share. Isn't that weird? Right here, see? $137 per share. I buy one contract, do one covered call, I make $236, but it's still 1.7%. Wasn't Kohl's 1.7%? And didn't we only have to invest $1,300? So here's a question for you. If I'm going to hold on. Tax. Oh, Sherman, have I got something for you? Now, he's the one who brought it up. I usually don't cover taxes. I am going to say something about taxes in about 2 seconds. Let me finish this up, and then we're going to cover taxes next. You're going to love this. I found something really cool. All right, so I'm making 1.7%, but I'm spending $13,000. Now, what if instead of doing this company, Target, what if I did Kohl's and I took that $13,000? I did $13,000 on Kohl's. Well, I'm making 1.7% on a $13 stock. If I took the $13,000, I could get more of Kohl's, and I'll make more money. No, you won't, because 1.7% is 1.7%. Okay, so a $13 stock, you're making 1.7%. What was it, like $29? It's still 1.7%. Okay, 13,000. It's still 1.7%. So even if you took that 13,000, put it all into Kohl's, okay, you buy a lot more shares, but you get the exact same amount of money, because 1.7% on a $13 stock, 1.7% on a $137 stock. It's still the same 1.7%. Anyway, Andrea wants to take a look at Alcoa AA. Hold on. All right, let's get rid of this. Let's get rid of that. Let's get rid of this. Let's change this back again. And let's go back to Heya. Heya. Here we go. Now, before I do that, somebody asked me about taxes. Now, remember, I always say, if you really have questions about taxes, you want to talk to a tax strategist or a tax planner. So I found someone who does some really interesting, fun stuff with taxes. So we are going to do a Saturday morning training class. Okay, it'll be a paid training class where I teach you from zero to hero how to do the whole thing. Find your stocks, set up your account, what trades to make, answer all your questions. And then the second half of the class will be on how to not have to pay taxes. Sounds interesting to me. Anyway, let's keep on going. Let's take a look at Alcoa. 8888. In here, oh no, kiddo, look at that. Okay, your high, your bottom, up and down. Okay, wait till you find the bottom here. See, you missed the opportunity. It was 2 weeks ago. Jump in, goes up. Once it's done, turns around, goes back down again. Yeah, see, if we zoom into the last 30 days, okay, what's that last 30 days tell you? See, 30 days ago we're 38. Drops down to 35, shoots back up to 40. Now she's coming back down again. Alcoa. Sorry, kiddo. Gotta wait on that one. Excited to hear that. Sweet Jones. Yep. It's going to be a paid class. Now, I try not to sell anything online. When I'm online, I'm here to teach you guys. I'm not trying to sell anything. But I have no control over the other guy's information. So we decided to put together a class that teaches people how to go from zero to hero, how to do this. A paid class. Yeah, and then we do taxes. Let's keep on moving on. Midnight, I have no idea what that means. If you could only do two, what are thoughts on BTC or XRP? Ben, how are you doing tonight, Mr. Ben? Now, sorry, Ben, that it's taken so long to answer your question. You're not going to like the answer to my question. No. Sorry, dude. Bitcoin, I love the idea of Bitcoin. I like the idea of XRP. I really, honestly do. Okay? Basically, what you're doing is you're throwing the keys to your Lamborghini to a teenager. Let me explain. How to sign up for the paid classes. We're not going to be doing it this week. We'll be doing it next Saturday. Not this Saturday, but next Saturday will be the first class. So show you how to invest, get you 1% every week, 50% per year. And then the second half of the class will be all on taxes and how to not pay taxes. Okay, so you have to show up next week. Intel and ASST seem to be going down. Do we ditch both of them or hold them? Angel, hold on a second. Okay, let's finish up over here. Italy. I would like to sell puts on Google, but the premium is not even worth it. Well, that's your answer right there. Okay, number one, I don't sell puts. Okay. Now, Angel, I'm going to ask you to ask me it again in about 15 minutes because, holy shit, 11:22. Let's do it now because, holy cow, I got 100 questions. All right, that's it. We're done answering questions because we're at 11:22. And it's over 200 people. If we can stay up 200 people at 11:30, I'll stay on a little longer. So we got over 100 questions. Let's do this. Okay, so Italy. When you're selling a put on Google, I don't do Google only because it only has 2 years of dividends, which means it's not quite there for me. Okay, we looked a little earlier. There's 9,840. Was it 45? 9,845 different companies. Why are you stuck on Google? There's so many other ones out there that are consistently profitable. All right. Tesla, Apple, Meta, Tesla, Microsoft, opinion next week, up or down? Yep, that's my opinion. Yep. Can you explain what SPR and liquidity is? Oh, spread and liquidity. Oh, the spread is the difference between one price and the other. The bid, the ask, what you can buy it for, what you can sell it for. That's the spread. Liquidity is how quickly can you get rid of something. There's a lot of people on the dance floor or nobody. Cent, AXP. Ooh, I like American Express. We're a little bit late because I'm only on from 9 until 11:30. It's 11:23, so I'm going to try to get to everybody's question. I will answer everybody's question. So give me a moment or two. Let's do this. NAT, dividend safe. NAT. Coach Musa, yeah, ask me to Sunday. Fangs, no. Take care, Sherman, thank you. Fangs, it doesn't fit. Can you do CVNA? No. Okay? Now, when I ask people to make sure the company has consistently increased their dividends for 2 decades and have weekly options, trust me, I know almost every single one that fits that category. Hello, do you have any options expiring tomorrow? Yes, I do. Chasing Jack. If you have to choose between Verizon and AT&T, which would you choose? Verizon. XCM, never heard of it. CEE, never heard of it. RGTI, I have heard of, have looked at it plenty of times, and it's a no, no, and a hell no. Okay, what I'm looking for specific, and it's a challenge for me. It really is. I'm having a difficult time trying to figure out when I say 20 years of increased profitability, which means the company has to have at least 20 years of increasing their dividends. That's a simple request. Are they consistently profitable? Great, I'll take a look. Do they have weekly options? Okay. Enjoy your days away from the computer. Yep, see what we can do. So RGTI, no. OTF, never heard of it. Hello from North Dakota. Holy cow, I was wondering where you were. There's only one person up there. That's got to be you. How did you learn options? Trial and error. Lost a lot of money. If you had to choose between Verizon and AT&T, which one it would be Verizon. I think he said in the past he taught himself options. Yeah, I did. I made a lot of mistakes. What about taking out some of my 401? Yeah, have fun with that one. Doge. No, I don't do coins. Sorry. Dividend stocks only. Can one follow your daily moves? Absolutely, Mel. Okay. I have a morning trading group. Okay. That it's a paid group, people pay to be there. I have this old philosophy. It's not my philosophy, but I learned a long time ago. Those that pay attention. So this here's all free. So you guys take this information, do whatever you want. But if you want to be in the morning trading group, that's only for serious traders, and it is a paid service. Okay. Now, I don't try to sell anything, so I'm not trying to sell anyone anything. If you're interested, all the information is in the bio on the websites. Let's keep on keeping on. I don't do any coins at all. Okay, Canadian freshwater fishing. Chasing Jack. If you had to choose, Jack, that's like the 4th time you asked me that question. Okay, Canadian freshwater fishing. You said, please answer the question. My answer to your question is, I don't do anything except dividend stocks that have weekly options only. No coins, no Forex, no WhatsApp, no Telegram, none of that crap. Now, you got like 500 people here. I do not do Telegram. I do not do cryptocurrency. I do not do Forex, quick contracts. I don't have a WhatsApp. I don't have a Telegram. If you really, really want to talk to me, you really want my opinion, and I'm going to say this, there's about 500 people here. I'm going to say this, and I can almost guarantee maybe 2 of you will send me your phone number, and I will personally, not one of the people working for me. I don't have anyone working for me, but me personally, I will call you back, unless, of course, you don't live in the United States. Because I have some Canadians here that they want me to call them. I don't have that service on my phone. Sorry. How often do you get stuck with a stock for longer than a week? If you do, just repeat. Brian, I always repeat. Okay? I will buy a stock and I'll hold on to it for however long it takes for me to hit my target. If I can get 1 or 2% every single week. Now, if you take a look at my list from last year, what I actually bought last year. Where is it? Okay, here's all my positions from last year. Okay, Aunt Sherman, you're in India. You and I would have to do a Zoom call. So you'd have to text me with your Zoom information and we'd do a Zoom call. Now, right here is all the stocks I bought last year. Okay? Nordstrom's, Mara, Riot. Let's go back. Where are they? Okay, Kohl's, Dell, Ford, Intel, MPW, Walgreens. Kohl's, Ford, CVS, Kohl's, Ford, Walgreens, MPW, Mara, CVS, General Electric, MPW, Nextera, Siri, Walgreens, so on and so forth. All the stocks I buy are right here, listed for everyone to see. You can see exactly what I buy. Paramount, JD, Albemarle, Macy's. Same stocks over and over and over again. Now, if I can get a 1 or 2% every single week, why would I want to get rid of it? Can you explain QDTE? Yeah, no. You're asking me a question. QDTE, we looked at it earlier today. It's only been in business for 1 year. They have 1 year worth of data, and it ain't that great. Okay, they go up, they go down. They're not consistently profitable. They've only been around 1 year. It's like throwing your keys to your Rolls Royce to a teenager. Just doesn't make sense to me. Okay, stock market's been around for over 400 years. Most of the companies I buy are 50 to 100 years old. Why would I invest in something that doesn't have a good track record? My idea of a good track record is 2 decades, 20 years. If the company is consistently profitable for 2 decades, 20 years, yeah, I'll continue to buy it. I will continue to get money from it. I will continue if the company is continuously profitable. And it's really not that difficult to find out. You got the Dividend Kings, 5 decades, 50 years of increased profitability. Dividend Aristocrats, 25 years of increased profitability. Dividend Champions, 25 years of increased profitability. It's really not that difficult. If the company's 3 or 4 years old, no thanks. Come and see me after you get a little bit of peach fuzz, after you mature a little bit. Now, I have nothing against the people that work at some of these companies. They may be the greatest people on earth. But that's not good enough for where I want to put my money. You guys have to figure out what is right for you. I can't tell you what is right for you. I can only show you what I do. What I do, and yeah, the red is not losses. Okay, green is buying, red is selling. When I sell something, that's red. When I buy something, it's green. It has nothing to do with profit and losses. Red is selling, green is buying. Okay? All right, let's keep on going. How often do you get stuck with a stock? Oh, often enough. Preferably, I like to buy on a Monday, be out on a Friday. Every once in a while, I have to hold it maybe 2 or 3 weeks. Longest I've ever held anything. Now, I've been investing for 20 years. The longest I've ever held anything is 9 months. That's it, 9 months. That was Kimberly Clark 2 years ago. I bought it, she dropped, turned around, went back up. Now, I held it for 9 months, but get this. I collected 3 dividends in over 30 premiums. Now the premiums, well, look at them right here. 71, 60, 36, 39, 28, 21, so on and so forth. Okay. Every single week. Week after week after week. 9 months. 3 dividends. Most people just collect dividends. Okay, dividends. Once every 90 days. Well, I collect the dividends and the weekly premiums. Okay, so I get over 1% every single week. That's over 50% per year. Compounded, it's over 70% per year. But I don't compound mine because I use mine for my bills. So 60 years old, retired, I have to have the, income. Migas, is that the right name? Migas? Hi, why just weekly and not 2 or 3 day options, for example? Time value. Migas, why 2 or 3 days? Well, Monday to Friday, that's 5 days. 5 days. Okay? 2 or 3 days. Well, now you just lost 60% of your time value. Now, the value of an option, there's a whole bunch of crap that comes up with the valuation of an option. It's called Black-Scholes pricing methodology for standardized options. It's a huge mathematical equation. And there's a lot of stuff in there. Okay, there's the intrinsic value, there's stock price, there's time value, there's interest rates, there's implied volatility, and there's a whole bunch of other crap involved in the pricing of an option. But mainly, the main item of an option is time value. So if I'm buying on a Monday, by Friday, that value decreases every day 20%. Monday, Tuesday, you just lost 20%. Wednesday, you just lost 40%. Thursday, you just lost 60%. Okay, so time value is a huge component of the option itself. Angel, James, where can I access the Zoom link for tomorrow's afternoon class? Okay, Angel, if you are in the morning trading group, whatever email address you signed up with is where you will get the link. Okay, I send out the link an hour before each class. All right, let's keep on progressing. MPW, love MPW. Upside down, bull run confirmed. Alrighty. Hi, why just weekly options, not 2K? You already asked that question. Sounds good. Thank you. Looking forward to it. You got it. How do you calculate for the area under the curve? Mang, I have no idea what you're talking about. Okay. Now, Mang, I'm not quite sure if you got the first part of where did this trading strategy come from. Okay. 15 years ago, when my daughter was 9 years old, she jumped on my lap and said, Daddy, what you doing? Can you teach me? I found that rather odd because she's 9 years old and a girl. Not something a 9-year-old girl is usually interested in. I said, okay, fine. So, to teach a 9-year-old how to trade in the stock market without losing, because we all know she'd start crying, I'd feel like crap, I'd be sleeping on the couch because Mom wouldn't be happy either. It had to be simple, safe, predictable, consistent, and no way for her to lose. So I came up with the 5 rules. It took me a while to create a strategy specifically for her. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must. And then check the numbers. What I mean by the numbers, what am I buying it for? What strike price am I selling? How much am I collecting on the premium? Is it 1% or more? Great. What's the chart telling me? Well, this chart here is telling me no. Look, 30 days ago, here's the bottom, here's the top, now it's coming back down again. That's telling me not this week. Even if the numbers say yes, well, the chart's telling me no. Now, if I go back on the chart a little bit, okay, now the chart is telling me yes. 30 days ago high, down, up, down. Here's the 30-day bottom. 1, 2, 3 days to the upside. Perfect time to jump in. Perfect time to jump in. Yeah, but you collect a dividend only after holding it for a week as long as you buy it for the X date. Jamar, yes, but I'm not looking to collect a dividend. You're new here. My best suggestion would be keep coming back because each day you learn something new as long as you keep asking questions. It's a good question, by the way. But we're past 11:30 and I'm usually done at 11:30. I always say if there's more than 200 people at 11:30, I'll stay longer. It's under 200, so I'm going to finish up the questions and then I'm done. And then you guys won't see me again. Holy cow, another 100 questions? Shit. All right, let's keep on going. How do you graft a sin function? Bang, I have no idea what that is. Brian, how often do you get stuck with a stock? If you do you repeat the process? Exactly. Brian, remember rule number 1. Never buy something. Okay, see you later, Sherman. Never buy something that doesn't make sense. If you don't understand it, don't buy it. If you can't explain to me in 30 seconds or less why you bought it and why you think it's good, don't buy it. Coney, hell no. MSTR, double hell no. MPW, love it. So what indicators should we dive in? Okay, Pierce, that's always going to be something you have to choose. I have 2. That's it. Consistency of profitability and weekly options. The only thing I'm looking for. Okay, Chasing Jack, I already told you Verizon over AT&T any day. Dissolution of stock price will go down, thank you. How you pick your weekly options based on technical analysis? No, Mingus. I do my analysis strictly by a 3rd grader pointing out to me, here's the high, here's the low, now it's going up. That's it. Adults have a tendency to make this more complicated than it needs to be. It was created for a 9-year-old. I'm assuming you're not 9, that's why you don't get it. Okay? It's actually simple. 30 days ago, 30-day high. It went down, it went up, it went down. Here's the 30-day bottom. What usually, it's not guaranteed. The only guarantees in life, death, taxes, and disappointment. Okay? 30-day bottom right here. 1, 2, 3 days to the upside. Elementary. Going down, now it's going back up. Okay, if you think for any reason whatsoever that stocks do anything other than going up, going down, going up, going down. If you think they do anything other than that, you're sadly mistaken. That's all they do. They go up, they go down. They go up, they go down. These numbers, that doesn't mean anything. It doesn't. Seriously, think about it. It means nothing. Where's the high? Where's the low? Where's it going now? Does it matter what the number is? No, it doesn't. It matters is it's going down, now it's going up. That's all that matters. And it's actually that easy. Okay? Adults have a tendency to complicate everything. That's why, now I've been trading for 20 years. The first 5 years, I didn't do that great. But the last 15, after I came up with this strategy for my 9-year-old, because she was constantly getting 5% every single month, and I wasn't. I was like, hey, wait a second. I created this for her. It is so simple. Why don't I just forget all this crap that I know and just stick to this? It's 10 minutes a day. That was it. To keep a 9-year-old entertained, it had to be simple, safe, predictable, and consistent. It's so simple, it's actually sad. It's so simple. Can't see. Okay, I can't help you out. You can't see. NNE, never heard of it. OKLO, never heard of it. Okay, I want to get to all these questions. Thoughts on JEPI? Hell no. So, do I close out the option for new call Friday? No. Okay, Secretariat. Always. Secretariat, you've been here long enough. Okay, you know. And I still, Secretariat, I honestly don't know why you haven't joined the morning trading group yet. Okay? I have not lost very much of anything last year. Okay? Everything is simple and easy. If it's not worth $100 a month to you, I don't know what to tell you. Okay? It's not that difficult. Join in for a month. See if you like it. What stocks do you recommend for best dividends? I don't recommend anything. Gulf America, hell yeah. NVDA and Caterpillar. I like Caterpillar. NVDY, hell no. Caterpillar's been around for about 100 years. NVDY, no. The numbers just don't work. Love Chevron. Very strange. That's actually a very smart strategy. Thank you. Well, it wasn't mine. It was for my daughter. Why 2 weeks before on a Monday? Oh boy. Melody, how are you? Okay, so making a difference. Why 2 weeks before on a Monday? All right, here's an idea. If you know a stock is going to move on a certain day or by a certain day, let's go back to the. Sorry, I gotta put my glasses back on for this. Procter & Gamble, okay? Procter & Gamble, right there. That's when they're paying their dividend. Okay, stocks move for two reasons, a known reason and an unknown reason. You don't know what the unknown reasons are because you just don't know, all right? You can plan for a known reason. Earnings reports, dividends, stock splits, announcements, new products, seasonality, certain things like that. You can make a calendar to say, hey, Procter & Gamble has its dividend on the 24th. Great! If so, the stock has a tendency to go up in value before the 24th. When? Well, 1 week, 2 weeks, 3 weeks, sometime. Is it right all the time? No. But usually it goes up before the EX date. So how do I take advantage of that? Well, I buy it 2 weeks before the date. 2 weeks, and then on a Monday. Why on a Monday? Because I do covered calls. Covered calls, for me, are best done on a Monday. I buy it at the market open, I sell at the market open, and then I wait until Friday to get out with my profits. I hate the weather changes. Dries up my lips. Okay, anyway, let's keep on going. Do you sell the stock after the dividend? No. It sells off by itself. MX, no. What software is that? Mike Barr, it's not a software. It's actually a trading platform called Thinkorswim, and it's available through Charles Schwab. You can actually download it and use it for free, okay? But they'll let you use it for, maybe a month or two, and then they want you to put the money over there, but I find it's not that bad. He's asking what service you use for the data. Oh, for the data. That's Yahoo Finance. That's free. You can use Google Finance. You can go to NASDAQ.com. You can go to New York Stock NYSE.com. Okay, any one of those financial stations will give you all that kind of data. Club Med Tom, for 50-year-old single, what would be a good tax strategy to do this strategy? Number one, Tom, okay, Club Med Tom, yeah, you need to talk to a tax strategist. You and I have had this conversation before. A tax strategist will show you how to set up your account so you pay the least amount of taxes legally. Okay, making a difference. Tesla, no. Okay, Tesla does not have dividends. It's a no. I don't know why you would come to a dividend channel and ask about a stock that has no dividends. That makes no sense to me. TMRC, never heard of it. How would you trade futures? Ooh, I traded futures years ago. Okay, I would definitely, if I was going to trade futures, I would definitely look at the Commitment of Traders report. If you don't know what that is, you shouldn't be trading futures. Oh, I know. There is a lot. There's not a dividend, but a big in steel mill. Tanner, you need to explain. Oh, TMRC. Never heard of it. Yeah, Tanner, I got you. TMRC. I've never heard of it. What the heck is TMRC? TMRC. I can't believe I fell for that one, Tanner. ER, not even going to bother with it. Austin, what's happening? Okay, I can't wait until I understand this all. Right now, I'm at a beginner of learning. Absolutely nothing wrong with that at all. At one point, I knew absolutely nothing. Okay, now I've been doing this since the 90s. So, I'm actually that old. Okay, I've been doing this for the past 20 to 30 years. It's not that difficult. It's like riding a bike and driving a car. If anyone ever taught you how to drive a car, it's like, wait a second. I got to start it. I got to put my foot on the brake. This is the gas. This shifts it. This goes backward. I got to look at that mirror and this mirror and that mirror at the same time. And I can do this and then I can do it. Yeah, it's confusing as hell once you first sit behind the seat, But then after a while, give me the key. I'm good to go. Nobody is born runner. You got to walk. You got to crawl before you walk. Okay, I love Ford. I'm not going to look at it today, maybe tomorrow. Magic Magician, what's happening? I made $960 on Tesla today. Good for you. Mike Barr, Thinkorswim. Wait, what platform are you using? Thinkorswim. Target, look good for a covered call. We just looked at Target a little while ago. I don't really remember it. I still got 80 questions to go. We're almost at 12. Holy cow. Taxes, you promised. What? Here we go. Now, I'm always looking for information. Always. This guy, okay, showed me some interesting stuff. It all makes sense. So we're going to make a presentation next Saturday. It's going to be a paid for class. Terribly sorry. I know how some of you guys are used to free stuff, but I do have to draw the line somewhere. So we're actually going to do a class going from the beginning to the end. I'm going to supply all the stocks that I'm trading, how to do things step by step by step for 2 hours. Okay, then you can answer questions. Then the next 2 hours is all going to be on taxes. And he's going to show you how to not have to pay taxes anymore. Okay, so let's keep on going. Just what the doctor ordered. Matilda, how are you today? Andrea, I wasn't quite sure what the heck that stock was doing. Okay. When is the half-day tax classes? Saturday. Okay, not this Saturday, next Saturday. Okay, so over Monday. I was going to say, I wanted to walk away from my computer this weekend, but I gotta chat with him again and find out when's going to be the next day. Any discount code? Don't know yet. Don't. Why do you execute the trade on Mondays? Dafa, good question. Why do I execute the trades on a Monday? Well, see if I can explain this. Time value. Okay? Simply put, stock market opens 9:30 a.m. Stock market closes 4 p.m. The maximum amount of time value you are ever going to get out of a week. How do you celebrate Trump's win? I don't. Isn't that weird? I didn't celebrate Biden's win. I didn't celebrate Bush's win. I didn't celebrate Carter's win. I didn't celebrate. I honestly don't. Never in my adult life has anybody in that big chair ever done anything for me. So I honestly don't care. Stock market's been around for over 400 years. None of them have done anything to stop it or promote it. So no, don't really care. Why on a Monday? Yeah, I'm well aware he's going to make America great again. I think it's great. I think it's wonderful. Until it affects me personally, I'm just going to sit and watch. Okay? All right, so why on a Monday? Because a Monday, the maximum amount of time you're going to get out of the stock market during the week, 9:30 a.m. Monday morning, 3:59 p.m. Friday afternoon. Thank you, Matilda. So, Monday morning, that's why. The maximum amount of time value for a stock option. As the sands flow through the hourglass, so do the days of our lives. So as the time ticks away on the clock, so does the valuation of time in the option. So Monday morning, you have 100% of the weekly time value. Tuesday morning, you now have 80% of the time value. Wednesday, you now have 60% of the time value. The only way you're going to get 100% of the time value, 9:30 a.m. Monday morning. Closes at 3:59 p.m. Friday afternoon. Maximum time value. That's it. Monday morning, Friday afternoon. That's why Monday morning. What days are you on? Sunday night, Monday night, Tuesday night, Wednesday night, Thursday night. I take 2 days off. Last year, it was 7 days a week. I did 359 days straight without missing a day last year. This year, I'm taking Fridays and Saturdays out. I haven't been out for dinner in a year. I haven't gone out dancing in a year. So this year, I'm going to take Friday nights and Saturday nights off. So tomorrow afternoon at 4 o'clock, I'm going to turn my computer off for the whole weekend. Holy shit, we're up to 347. Let's keep on going with the questions. Because I always said if we're over 200 by 11:30, I'll stay on later. All right. What days am I on? Sunday, Monday, Tuesday, Wednesday, Thursday. Okay? The night before the trading. So there's no trading on Saturday, so I'm not going to be on Friday night. Okay. Alero, Clarity Tax, Verizon. Love Verizon. What are your thoughts on the dividend capture strategy? Love it. That is the actual first trading strategy I taught for my daughter. And it's actually the oldest trading strategy there is. You buy the stock, you collect the dividend, you move on to the next company. Now there's, we looked a little earlier, there's 5,500 different companies that have dividends. So yeah, there's a lot out there. Thank you for answering my question. Chasing Jack, you're welcome. Victor, Walgreens. Love Walgreens, and I actually have some. I got about 150,000 liquidated currently. Where should I start? Connor? Okay, Connor, now I've said this dozens and dozens of times. You want to have a conversation with me, seriously with me, okay? Beware of scammers who will send you text messages, will send you emails, all that kind of nice, neat, fun stuff. I don't do that. You want to talk with me? Put your phone number right here in TikTok or send it to my email. It's in one of the trading platforms. You know, there's 7 of them here. Okay? I will personally give you a call. me personally. You hear me here, you hear me live. Okay? You hear my voice. You pick up the phone and you say, hey, this is James from Dividend Stock Talk. You'll know it's me. I don't do WhatsApp. I don't do Telegram. Okay? I don't send emails. I don't send text messages. If you want to call and talk to me, send me your number. I will give you a call. What AI would you invest in right now? Nothing. Okay? I've seen enough Terminator movies. I know it at some point in time, this thing's going to turn around on us and bite us in the ass. I know it's going to. Chad, are there dividends on offensive stocks? Raytheon, General Dynamics, Lockheed Martin? Yeah. Oil stocks? Yep. There's a bunch of them. What's cassava? Yeah, no. How much do you need to invest? Okay, it's a personal decision. There's over 500 people here. I can almost guarantee with 100% certainty we all have a different amount to play with. We all have different goals. We all have different time frames. We all have different strategies. We all have different crap going on in our life. Missed your call last week. Sorry, dude. I call. After the third call, I don't call anymore. I'll try 3 times. Why would you sell it then? Why would I sell what then? Wait a minute. You asked me, Mary, about AI. I don't have any AI stocks, Mary. What AI would you invest in right now? Nothing. And then you come back and you said, why would I sell it? I don't. Okay, Mary, if it doesn't have 2 decades, 20 years of increased profitability, it's going to be a no. There aren't any AI stocks that are over 20 years old, let alone 20 years of consistent profitability. Sherry, I see you. Hi, Sherry. Okay, Alero Clarity Tax. What delta are you using to sell in your covered calls? Okay, Alero, great question. Okay, that's a more sophisticated question for someone who shouldn't be here. Okay, you're in the wrong place, honey. Okay, this strategy was created for a 9-year-old. You're asking questions that are above a 9-year-old's intelligence level. Hey, how are you? Trader scientist. I'm fine. Trade with us using Bloomberg Terminal. Oh, hell no. Okay, Jerry Cat, you name me one person that you're trading with that gets consistently over 50% per year using Bloomberg Terminal. And I'll be more than happy to take a look. That is, oh, wait. Hold on, Jerry. Show me 2 or 3 people that make over 50% per year using Bloomberg Terminal. 50% per year using Bloomberg Terminal for less than 10 to 15 minutes every day. But what happens? Lost Wolf. But what happens when the stock drops significantly? You sell options out of the money? Well, of course I do. Have you looked at Able Mall? Yes, I have. What do I think about TPL? No. SUI? No. AER? No. And GE? Yes. 1 out of 4 ain't bad, Shannon. Okay, only 1 out of those is actually a decent company, in my humble opinion. General Electric's been around for over 100 years. TPL, never heard of it. SUI, never heard of it. AER, never heard of it. Paid class, typical TikTok fraud. Say, truth seeker, I hear you. I don't try to sell anything. Okay? When somebody asks me to do a joint venture with them and they want to be paid, it's got nothing to do with me. So, it is what it is. I'm here every single night. I don't try to sell anything. So, you take your fraud thing and you can do whatever you think you want to do with it. What about Oracle? Ooh, I love Oracle. Sherry, truth seeker, I signed up. No fraud. Thank you, Miss Sherry. I hope you didn't sign up with an imposter. Yeah, there are a lot of those out there. Oracle, yay! PLTR. Dude, when I say consistent profitability for 2 decades, 2 decades. That's not 2 or 3 weeks, not 2 or 3 months. That's 20 years. PLTR does not have that. Sorry. How do options work? An option, simply, Samurai Life. An option, you're selling somebody the right, not the obligation to buy from you at a certain price by a certain date. Sounds complicated, but it's really not. Where was I? Waves, okay. APLD, never heard of it. OKLO, I heard of it, it's a no. VDY, double no. APLD. So who are you using to trade with? Think or Swim. That goes through Charles Schwab, one of the biggest trading platforms there are. How about Wells Fargo? Oh, I love Wells Fargo. ET Energy Transfer, no thank you. Wells Fargo, yes. VOOV, no. Hello, Dan. How are you? Last time I work at Wells Fargo. Hey, Wells Fargo's been around for over 100 years. They consistently increase their dividends. The premiums are awesome. You just got to buy it at the right time. Par and Mini-Me. Sounded to me like you're not using Charles Schwab, so who are you using to trade stocks? Okay, Par and Mini-Me, this is Thinkorswim. This is owned by Charles Schwab. Charles Schwab bought Thinkorswim. Well, actually, they bought TD Ameritrade. TD Ameritrade bought Thinkorswim. This is a trading platform through Charles Schwab. Where do I sign up for that? Sherry, you don't need it. But I'll let you know when the time comes, Sherry. What time? It'll be Saturday morning, most likely. ODI, never heard of it. Were you anticipating a certain stock to jump with Trump to go into office? Nope. Any thoughts on AMD? Advanced Micro Devices? Yeah, I got thoughts. No. See, now when I tell people to take a look at the profitability of the company, go and read either two choices. Go and read either every single quarterly report for the last 20 years or go directly to the dividends. The reason I say go directly to the dividends is because if a dividend is the portion of the profits the company agrees to give back to the investors, if the company is consistently profitable, the dividend will consistently increase. If the dividend does not consistently increase, only means they're not consistently profitable. That's all that means. Okay? Now, if they made, let's say, $50 billion this year, and next year they make $49 billion, that's not consistently profitable. That's not going higher and higher. That's one step backwards. Why would you jump into a company that's not consistently profitable? It boggles my mind. Why would you put your money into a company that's not consistently profitable? It doesn't make sense. At least not to me. So when I look at AMD, Advanced Micro Devices, take a look at the consistency of profitability. It's not that difficult. Let's take a quick look right here. Okay, let's go to Yahoo Finance. I like Yahoo Finance. A lot of information, and it's right there. AMD, Advanced Micro Devices. Give it a minute to load. Here we go, right here. Okay. Oh, look at that. There are no dividends in the selected time period. So here's my thought. You come to a show that says dividend investing for weekly cash flow, and you ask me about a stock that has no dividends, and you want my opinion. Here it is. No dividends. No, thank you. There's 9,845 companies available. Why would I waste my time on a company that doesn't have dividends? Especially if I'm the host of a show that says dividend investing for weekly cash flow. No dividends? No, thank you. AMD? No. Good night, user 86224. Jamie, just want to say James really will call you. I had a nice chat with him a few days ago. Well, thank you. Hi, Miss Sherry. PLTR, Stephen Kane, same thing. Okay, check out the consistency of profitability. You ready? PLTR. PLTR. Yahoo Finance, this is not my information right here. PLTR. There are no dividends in the selected time period. Okay, so Stephen, if I could ask you a question, and if you give me an answer, why would you come to a trading show that says dividend investing for weekly cash flow and ask me about a stock that has no dividends? I had a very nice visit with James. Had trouble with the fakes. Yeah, there's about 30 people pretending to be me. So I always tell people, if you want to talk to me, if you're seriously interested, drop your phone number. I will give you a call. Unless you live out of the country, I can't call you. Sorry for you guys in Canada. If you want to chat, you'll have to somehow coordinate with a Zoom call, which I could do that. Not a problem. Who do you trade with then? Okay, see, Pa and Mini-Me, I honestly don't know how to tell you anymore that Think or Swim is owned by Charles Schwab. Okay? Think or Swim. It just moved. Okay? Log into Charles Schwab. Okay? Think or Swim is owned by Charles Schwab. Don't. Okay, back to where I was and back to where I was. Okay? Okay, Pa and Mini-Me. Think or Swim, this right here, is owned by Charles Schwab. You have two choices when you are with Charles Schwab. You can use Charles Schwab stuff, or you can use Think or Swim stuff. I like Think or Swim. I've been using it for 20 years. 50% is wild. Only Jim Simmons was able to do 60% for 40 years. Cool beans. I'd like to see that one. Crypto legend, Johnson & Johnson. I love Johnson & Johnson. However, look at the numbers for Johnson & Johnson. Currently, the price is $146.89. That means $146.89. The closest strike price would be $147. The 147s are going for $120 to $130. Not quite 1%. In my 20 years, I don't think I have ever bought Johnson & Johnson because the premium is always less than 1%. Time for sleep? Yep. But I always say, if there's more than 200 people, I will stay on. And right now, there's 204. So if you like, subscribe, all that kind of neat stuff, get the numbers up higher. Because as soon as it goes below 200, and I finish up with these questions, I'll be done. Ludwig, is Think or Swim free to use once you have an account with Charles Schwab? Yes, it is. Now, it's also free to use even if you don't have an account. They'll only let you use it for about a month or two. They'll let you use it for free for a month or two. However, they would like you to trade with them. And I do have a couple accounts with Think or Swim. Okay. Let's keep on going. Oh, I have been using that, still learning it. Okay, cool. Time for sleep. Thank you for your answer. You're welcome. Science Biz, exactly. Okay, Verizon. Yep, Verizon has dividends. Yep. What do you think about the upcoming Verizon earnings? I try to stay away from earnings. Altria, Wayne, I actually have some Altria. OMF, never heard of them. AMDY, double hell no. What do I think about Apple? Apple's an awesome stock. A little bit of a challenge trying to get with the timing on Apple. But Apple has a tendency, let's take a quick look at Apple. AAPL. Something I want to show you specifically with Apple. Okay? Here's the stock right now. Here's the high, here's the low. Look at the movement. Okay? But that's not what I want to show you. Check this out. You're going to love this. Now, go to seasonality for Apple. Look at that. Buy it in January, always goes up. 10 years, consistently to the upside. It's like you can't really go wrong with Apple. Now, I like to trade. I don't like to hold for a long period of time. My idea of long term is 30 days. Okay? I'm not the one buy in January, sell in December because I have bills to pay. I have bills to pay. Okay? I'm retired. I don't have as much money as you think I have. The 1% I get every single week, that pays all my bills. It does. And it allows me to live a very nice, comfortable life. OMF, never heard of it. Thoughts on Verizon? I love Verizon. Had a nice interview on CNBC. Okay. Where was that? All right. I didn't know if you had missed my text. That's why I repeated it. Yeah, well, Pa and Mini-Me, I always tell people put the question down once because I will answer each and every question. I actually have to stop the questions from coming in, and when I stop them from coming in, they pile up. And then I go through each and every one of them. Because I want to make sure everybody gets the right amount of time. You ask a question, I will answer it. It will take me a while to get to it. Too many times have I gone on to live shows and you see the questions just going flying by and then they don't answer them. Well, I take each question one at a time and yeah, they pile up, especially when I have a couple hundred questions to answer. Okay, got it. Would you mind showing your watch list so I can screenshot, please? Sorry, Brian. Answering questions you have already answered and ignoring new ones. Good job, entertaining. Okay, Stebun? I don't know how to pronounce that one. I do answer each and every question. Okay, sometimes I have to answer the questions over and over again because people are asking them over and over again. Bito, no. Jim Simmons ran Renaissance Technologies. I'd look into it. Passed away last year, great hedge fund. Ooh, I'm actually thinking of doing a hedge fund. So I'm working on it. I started in the pandemic and now Now I am 400%. Now I want to explore dividends. How to get started? Momo many? Interesting. Well, keep coming back every day. Keep asking questions. Is that it? Yes, I'm at the end. Mom of many. Oh, cool beans. All right, MSTY. Basically, it's going to be the exact same thing. Not that. Right here. MSTY. I call it Misty. MSTY. Yieldwec. MSTR. MSTR? Yes, MSTY. Yeah, MSTY. Okay? 1 year. That's it. MSTY, 1 year. That's it. The first dividend was in April 2024. Then look at the numbers. 413, 252, 303, 233, 194, 185, 420, 442, 308, and 228. No consistency. Up, down, up, down. Okay? And it's only been around for 1 year. I like 2 decades. That's 20 years. Hold on. You missed my question. No, I didn't. The last question. Mini-me. I didn't know if you had missed my text. That's why I repeated it. Par and Mini-me, that's the last question I got from you. It wasn't really a question, it's more of a statement. Okay, so I take the questions one at a time. Now, there are some words that are blocked from my questions. So if you have a word in your question that is not allowed, then your question won't be visible. So yeah, the questions are monitored because I have way too many people asking me stupid stuff. Just trolls. All right, so that being said, it's 12:15. I've gone 43 minutes past my time answering all the questions. All the questions have been answered. I am done for the day. You only buy dividend stocks only. Yep. Ooh, I got some questions down here. I'm sorry you guys on YouTube. I get questions here, and here. I forgot the questions down here, so I got to answer these questions. All right, Michael, which is better, Kohl's or Target? I'm going to take Kohl's. Sorry. TPL, Texas Pacific Land, was founded in 1871. You're getting dividends off options. No. Pa and Mini-me. I'm getting I'm getting dividends from the dividend stocks. I'm getting the options off of the dividend stocks, not off of dividends. I'm not getting dividends off of options. Okay, down here, Shell. We already looked at Shell. AA reports strong earnings, but tariffs hit shares. But I don't understand when it hits the U.S. company. Okay. I own T, with which Goldman Sachs said a few weeks ago that T is top pick and a target price of 40. I wonder why HLF sold off after the run, because earnings was almost double and raised outlook. Their products lose weight but healthy, late. Okay, got that one. CP, got that one. No, I don't like AT&T. The numbers just don't look good. Let's look at AT&T for a second. All right, let's move this stuff around a little bit. Change this back. T. Okay, so last year we saw T do this thing. Just recently she pulled back, did some profit taking. Now she's retracing. Okay, 22.53 is the current price. 22.56. The 22.50s are going for 56. That's nice. The 23s are going for 35. Well, that's nice too. Well, let's zoom in and take a little bit closer look at it. Okay, the low of the year for AT&T. Well, last year it was $16.98. It bottomed out in the middle of April at $15.94. And then it had a beautiful run up from 15 all the way up to 24. Okay, now she's pulled back. Now look at this run right here. Okay, well, let's look at the last 30 days. All right, here's your last 30 days for AT&T. 30 days ago, we're at 22.80. Shoots up to almost 23.20. Drops down to 21.40. Now we got 1, 2, 3, 4, 5, 6 days. 6 days the upside. That's a nice strong run. I'm going to actually write AT&T down for tomorrow. All right. See, tomorrow I have to roll my options with Robinhood. Robinhood, I got to roll my options on Fridays because Robinhood doesn't allow you to let options expire. Weird. But, yeah, so AT&T, I like that. But let's take a look at the seasonality for AT&T. Yeah, see, it doesn't look that promising. Look at it. This time of year. Yeah, she may go up a little bit here at the end of January, but then she drops. So what if, hypothetically speaking, I did the 22s? Well, the 22s are going for 60 cents. Okay? Now I lose 60 cents, which means I'll be walking away with 4 cents to that. Okay, so yeah, I can get my 1% out of the 22. And if she stays above 22, I'll be out. So yeah, maybe I'll take a look at that one. Sounds good. But I don't want to hold on to it because you see the seasonality. Look at the seasonality for AT&T. Okay? Not the greatest stock in the world to jump into now. Okay, look at it. Drops, goes up, drops, goes up, drops, goes up, drops. Here's the nice one right here. Fourth quarter. Nice jump up. Here, I don't know. Good night, Miss Sherry. Thank you so much for answering. Sorry, must be a word that's messing things up. Yep, Oracle hit 200 tomorrow. No idea. TPL, never heard of it. TPPL. Interesting. Yeah, but look what it's doing now. Okay? 30 days ago, jumps up. Here's your high. What do you think's coming down next? Yeah, it's going to come down to the downside. Monthly, I don't do monthlies. The numbers just don't work. Okay? Terribly sorry, dude. Shannon Lee, the numbers just don't work for monthlies. Okay? Figure out where it's going to be in 30 days. See, look, this is the last 30 days. Great. Now tell me where it's going to be in 30 days from today. Is it going to keep going up 30 days? Yeah, I don't think so. I don't do 30 days. It's very hard to figure out what's going to happen in the next 30 days. Hey, Sherry, hope you're still there. I'm going to give you a buzz. It's a question I needed to ask you. All right, that being said, you guys have a great night. It's past 11:30. Wow. Great night over here. See you later. Great night here. You guys on Facebook, have a nice night. And you guys over here on Instagram, have a lovely day. And you guys here on TikTok, bye all y'all. Ooh, 22. And over here on YouTube, you guys have a nice night. See you later. And nobody there. See you guys later. And you down here, cheap viewers, and Strambino. Streambo. You only buy dividend stocks only. Absolutely, Michael. Faithful Fairy Tale. Cheap viewers on streamboo.com. I have no idea what that